All right, we're going to go ahead and get started soon. Hope everyone had a good weekend. And just let me know in the comments if you hear me okay. So I'll move on over. Okay. I'm going to assume you guys can hear me. It looks like everything's working on my end. So, what a weekend we had. What a weekend. Let's turn on my camera. So you can all see my smiling face. And yes, not AI, guys. So here we are. What a weekend. Super taco. But I don't know if it's a similar type of taco we had, but when the MOU came out, I'll explain that in a minute. But our charts expected a rally. Our weekend update before all this news emerged, or early on Saturday morning, we sent that update out to members, and the rally was expected. So this and I even joked in my update that said that you can expect a taco based on these charts because of the rallies we were expecting to see. We even saw our box on the triple Qs hit that we've had for several since early June. So a couple months, maybe just a month and a half to be precise. And we had to wait through all this. Okay, the box was hit. And now tonight we're getting a strong reaction from the box, literally to the penny. So my recommendation to my members was to start a position, build a position, start your position, but you may want to expect it to continue to fall in the box in case there was more selling in terms of selling in the semiconductor space. So that's going to be key here. That's going to be key. It's going to be the semiconductor sector, whether this rally is permanent until new highs or not, or it's going to fail. It may fail with circuit breakers or some dramatic drawdown. So what we do know is we could build another connector wave in technology, another bounce, and we can use that, which is fine if that's what we morph into. And then we could end up going a lot lower later and still be in, as you know, the 4. The thing is what's going to happen whether we get that, we get a new high, or we get none of that. We just fail. Maybe we fade tonight. Maybe tonight it all unravels. It's going to be the semiconductor trade. So it's how many people have piled in to semiconductors, and have they fully capitulated yet or not? That's going to be the question. We do have a lot of event risk and catalysts this week and coming up with the Fed meeting, with earnings from some of the largest technology companies. So there's plenty of catalysts to whipsaw the market around. So again, this kind of where we see, I like to always start out with the news. And again, I kind of go through this with my members. I'm going to do this once a week. And I try to save different articles and things I come across that are interesting to me. Okay, not everything's interesting to me, but these are the things that are interesting to me. And no particular order. Looks like supposedly Ukraine attacked an Iranian vessel. That's something we want to keep an eye on. Could that broaden the war out? Okay. Yes, Lucas here talks about the reserve currency, losing that. Worse than obviously losing a major war. That's what Trump said. Those were Trump's words. Why do we care about that? See, a taco in the Middle East is going to create a situation where Iran will be able to establish itself as a strong player, if not the dominant player in the Middle East, and that will end the petrodollar era. So we would assume, the underlying assumption is we would never allow that to happen because it's existential to our dollar, to our financial system, and to the money printing that has been going on. Without that, the whole house of cards collapses. And so the underlying assumption is we wouldn't ever accept that kind of outcome. That's why my what I think could happen is we would still try to use military action to take the Strait of Hormuz, and these pauses in this negotiation and the theatrics we're going through is all just to kind of buffer the market reaction, so it's not just out of control, up and or down, depending on your asset. And also, a lot of it is just theatrics in itself, orchestrated volatility in some ways too, that they take advantage of. And what better way to take advantage of Friday's positioning uh, by pulling back this weekend and then betting short on oil, which is exactly what the insiders have done. And there's data out there that shows that they made a lot of money because there's huge short trades placed on oil. So there's that too, taking advantage of the just, hey, your position in this situation, and trying to make lemonade out of a lemon. But the bottom line is the United States can't just tuck tail and leave Iran, or there's significant implications for the United States' financial system and monetary system if we really do that. That's why the isolationist side of the Republican Party doesn't really understand that. And of course, the war hawks don't understand the amount of effort it would take to take it. So there's no good solution to this problem, unfortunately, that we find ourselves in. And there is no reverse Uno card. There is no do-over. We cannot go back and hope things are the way they used to be. I know that's what the globalist in the kind of the establishment would like, but that's never going to happen. So there needs to be a new normal, and the new normal is either one or the other. End of the petrodollar era, dollar goes down, gold goes higher, silver goes higher. The cost of energy will rise as it's inefficient. We need to also have less supply because Iran will throttle back supply at will, and you have to pay a toll. Insurance costs will rise, costs will rise. So you have inflation, and of course, you won't be able to print as much money because our dollars won't be worth as much. So you would either have to raise rates substantially or just accept the fact that the system's going to reset and be comfortable with that, in which I don't think our citizens will want to see Social Security go away, Medicare, and all that. So you've got this problem you can't just kind of tackle your way out of. So you got to go in and take it with boots on the ground. Well, that's, you're talking 100,000 troops with many, many casualties, if it's even possible to be, if you couldn't even conquer it. And there's no appetite for that for most Americans, because most Americans don't see the other side of the equation, right? We only see what's in front of us. The other side of the equation comes years later, as after we tuck tail and leave Iran. So those are the situations, and that's what we're faced with. And we haven't have this movie hasn't ended yet, but all we know is the charts are predictive that we use, and we have a good idea what the future is probably going to look like. And it's probably going to be a lot of inflation, higher interest rates, gold and silver rule, energy rules, agriculture will do really well, and many other sectors that you probably are not long right now are going to be great investments here and right now. Most investments that most people have in their mind and they think about all the time, they dream about, they covet these big tech stocks. They're probably not going to be great investments. Some may survive, many won't, and we can see that. All right, just kind of going through the news. Let's see if there's anything else that's interesting. This is an interesting chart here. Wealth distribution in the United States is as bad as it was in France back in the late 1700s. Okay, that's pretty bad. All right, the wealth distribution is so concentrated at the top, right? And this is what Marx predicted would happen and would be the end of capitalism. So we're maybe, and we are seeing a left, like left-wing candidates getting more momentum and getting more airtime. So you got to be careful there. So Central bank liquidity. So China's been pumping the market. We can thank China for money printing. China has a big, I guess, compulsion to make sure their indices are green as well, because to them, it kind of reinforces their model of government to the external world as what they're doing is working. Everything is perfect. Nothing to see here. Look at this. But again, just like all the other governments, it has to money print, and it actually only exists because the system exists in itself. So it's through self-preservation. It also wants Trump to taco and leave the straight. It can't have the United States take the straight. It wants the status quo, even though the status quo, may not, by pushing the war, may harm the United States, their opponent. It could collapse the system, and they can't have that because they are the system. They depend on the system to exist as well. And so that's why they've been freaking out about what Trump's been doing too. So they money printed a wave four, but that wave four is almost over, if not already. Of course, this is the big headline, Trump taco in here, Trump taco in. And just kind of looking through if there's anything else here that I can see. So this is that semiconductor chart. I'm going to pull this up. See that? So if semiconductors follow this path, the indices will follow the same path. But if the semiconductors can come back and take out, 592 and really start to extend, then the indices have a better chance of rallying uh, and possibly even making a new all-time high. Okay. And we did now ring central, ring on our earnings. It was a great combination of technicals and fundamentals, and we already anticipated the fundamental drivers. The analysts came out with those reports on Friday morning, but my members got that information not only Thursday night but all week, that this is this likely outcome of their business and the shift that they've gone through. And so I encouraged to take a stronger look at that, and it worked out well. Not everything works out on our channel, but sometimes when it does, it's nice to have it happen. And yeah, there's this talk, the United States has run out of missiles and things and bombs and stuff. And it's probably, some of it's probably true. Some of it's probably just fog of war. And we know the Houthis have entered the picture, and that's really muddied the waters in terms of military action, because they can attack Saudi Arabia and their oil fields through kind of a guerrilla style. And they can also close those shipping lanes. And that is a significant consequence to supply as well of energy. All right, we Tesla broke down on earnings last week, and we saw that happen. And it wasn't just the flip of the coin, and we got it right. We anticipated that breakdown through watching the consumer discretionary sector, XLY. When we saw the XLY break out of its structure early, we anticipated that would likely happen, including Amazon, and they both have fallen since then. So that was actually a tell, and we gave our members a heads up that the bearish position had a better chance than the bullish one. All right, we even mentioned the Bayou VIX and SPX after hours before it spiked on Friday, and I believe it was Friday or Thursday. I don't remember, one of those days. Cash on the sidelines is just a meme to keep you to keep buying in the market. We know Google's free cash flow isn't doing very well here. It's negative. It's never been negative here. We've never seen it negative, and that's concerning. And that's something you want to keep an eye on, because cash flow, is the biggest predictor of share price appreciation, free cash flow. And just kind of looking through if there's anything else here. Okay, let's go through my other section, my likes. Yeah, no strikes. Earnings, in case you're wondering, this is our earnings picture. As you can see, so many companies reported. So many reporting. Okay, we have a big earnings week coming up. Yeah, Meta, I believe Amazon, Apple, a lot of big drivers for the market. Each one can be a sufficient catalyst to change the direction of the indices. Capitalism without capitalists, Bannon is obviously more of right-wing commentator, but he's got a point because ever since quantitative easing was introduced, we've had to bail out, socialize the losses. The idea too big to fail, and that's prevented opportunity from other people to come in and buy assets on the cheap and start a new cycle, and it's just kind of kept the wealth separated from, and eventually, again, Karl Marx predicted it. Karl Marx predicted it. This is how capitalism ends. So it's the same. So and I keep saying the thought leaders of capitalism or the economic system, I assume it's got to be the Federal Reserve chief with his lieutenants, along with the Treasury and Bank of Japan. They all need to get in a room and go, this shit is breaking down. This shit is falling apart. And in 3 or 4 years, we're going to have socialists elected, and then we're going to have pressure to redistribute wealth all over and nationalize the wealth back away from this concentration. And we're going to have a debt bubble situation collapse. Like, what are we going to do? They got to figure this out. Okay. And if they don't, and they just hope for the best, I think history shows there's going to be a lot of turmoil and civil unrest, unfortunately. All right. And looking at this, Jamie Dimon obviously saying the same thing I've been saying, but I guess when he says it, he's smart and brilliant. When I say it, it's like I'm stupid, paranoid, perma bear. But hey, listen to him. He only manages what, $1 trillion? Maybe he does. Yeah, maybe this guy doesn't know what he's talking about. But he says you underestimate the risks and wouldn't buy stocks or treasuries. I agree. Right now, would I trade them? Sure, I'll trade them, but I better have a good cash pile on the sidelines. Okay, and just kind of looking through if there's anything else here. Netflix had a bad earnings, and we actually expected that and caught that. We actually expected to go even lower. All right, and then just kind of looking through my replies, and then we'll go into charts and your questions. All right. Yeah, there's an oil tanker that exploded supposedly 10 hours ago because it hit a mine. It's gonna be a problem, right? Even if you open up the Strait of Hormuz, you're still gonna have mines all over the place, and who knows where they are, and they have to be cleared. And what captain is gonna, still want to drive through that? I mean, at some point, it's just not worth the risk. So that's gonna be a big problem, right? And I don't see Iran and the US working hand in hand to clear mines together. That is just not going to happen. Iran probably doesn't even know where they all are now. They probably lost. Do you think they have the command and control and the structure to map those out? They have no idea. They probably have no idea where the hell those things are. Okay. And just kind of looking here. Elon Musk says money won't matter in 2036 because of AI and robots. Yeah, I mean, I've seen Star Trek. They say the same thing, utopia, and AI and all that, and you don't get money, right? Money's worthless. And Star Trek already kind of war game this idea that you don't need money. But 2036, okay, so if there's no money, what are we doing now? Why doesn't he just give his money away? But no, he'll say, I need my money still. They all do that. Even Bernie Sanders says the same thing. No, I need my money because I need to help you fight. I have to fight against the people that want to hurt you. So he said something like that. So they all need but they won't give away their money. So anyway, but I don't think so. So I think the only way, if money doesn't matter, is an era of socialism is coming, right? Because to me, if there's no money, that means you get a certain allotment of funds. Someone thought about and speculated, well, then how do they decide how much of the piece of the pie that you get? Well, it's probably either based on your current net worth to society, your social credit score, or how productive of a tax-paying unit are you, and you get this slice, or your previous earnings. This is what you used to earn, your family's earned, so this is all you get. Guys, this is socialism. They can't just give everyone the same amount of pie. Not everyone's going to be able to buy a Ferrari. It's not going to happen. So there's got to be some kind of a redistribution and like allotment of goods and services that you will be authorized, and they're going to have, and basically you won't be able to move up a economic ladder anymore. It won't be possible. So you'll be locked in to whatever social ladder you find yourself in when this transition happens. This again, these are just my random thoughts. I mean, it may be crazy, but that's what I think if this is true. Okay, and just kind of looking around, see if there's anything else here. US dollar has lost nearly a third of its purchasing power over the past 6 years. Well, that sucks. But inflation is only up 3%, 4%. Yeah. We don't measure inflation correctly. So if you don't measure it, it didn't happen, right? Now, just kind of looking around to see if there what else is interesting to me here. I don't have it here. We have wheat. Obviously, wheat prices are doing really well here, breaking out from a major low. And guys, we our members bought wheat down in these this lower area on, and you kind of see it, that wedge. You see that kind of wedge, on that breakout. And we're long, and we probably just can keep rolling that futures contract because it's probably just going to keep going higher. Sadly, this is very sad for society and the lower end consumer, because wheat obviously goes into food and all the cheap items, inexpensive items. That means their costs are going to rise. Breads and cereals and grains and things. Okay, and let's see here. Retail investor cash allocation, as you can see, is at the lowest it's ever been, usually at market peaks. I'll bring this up. You can see it here. The lowest, not the lowest it's ever been, but pretty low, right? From a historical, it's at the extreme low level. Again, the cash on the sidelines is just a meme, whatever you want to call it, a slogan to convince you to buy. All right, and just kind of looking around. You want to watch the EYW as well. EYW, if it can't get back above 178, is likely to face problems. It's already pulled back from this level, as I've shown here. If it can't take this back, the indices will likely follow. AI and memory will follow, and there won't be, you cannot rotate your way into a bull market anymore because the concentration is so significant in semis and AI memory. The second and third derivative plays as well. So even if though that memory goes down, the software and money goes into software and big cap tech, it won't be enough to have the headline indices rise to new all-time highs. So the market can no longer, normally the market used to be able to rotate into a bull market advance and out of these corrections. It can't do it anymore. It needs the semiconductor AI memory trade. Okay. And just kind of looking around, SpaceX, really strange that Google bought $94 billion in SpaceX shares after the IPO. All they had to do was follow me, and they would have saved quite a few billions of dollars. My fee would have been very small. We knew exactly what was going to happen, and we know where to buy it, and it's not here. And in fact, we didn't chase the space stocks at all. I just read, and I believe somewhere in here, I don't know where my comment is. Somewhere a comment on this account. Let me see if I can find this account where a guy blew up his account and was very open about it. And it was very sad because he, lost all his money. And I thought it was about 500,000. Later, it seemed like it was $5 million was lost pretty much overnight in gambling. There it is. This is it. And again, he is noble, honorable that he's talking about this to learn other people, but it's sad because what happened is he fell within the framework of the internet, where in social media, which was constantly setting the conditions and context to encourage all this speculation, and they make it look so easy when it really isn't. And eventually, again, you crap out at the casino. You always do. So again, if you're following a lot of people and you're really influenced by the hype, and they're posting all these big gains all the time. 30, I'm up this, I'm up this, I'm up this. And they're not posting their losses. They're posting all these big gains and their personal gain, because you got to be really careful, because it's not that easy. In fact, the most trading systems, just over 50% of the trades are successful, a good one. You can ask a trader, that's been around and, for a long time. If you can have a win rate that's just over 50%, you have a good trading system, because your gains can compound, right? And that's how you make up for any losses. So anyone that says that their system is 80, 90, 100%, just call BS on that. And also, this gambling mindset is what's going to ruin people as the bear market continues to drive lower in the future. And we haven't even started. We're not even in the first the first inning of the bear market. Not even the first inning, not even the first pitch. We're more in like preseason, and we already have major accounts blowing up. When I looked at this situation in more detail, what happened is there was a lot of gambling in Rocket Lab and ASTS right at the time where we were telling our members to not chase it, because we were concerned of a major flat that was playing out, and it would correct and completely rug pull all the way back and reverse. Many of my competitors had the opposite view. They got caught up in space fever, and they contributed to the speculation. Again, they all fed into the propaganda machine that was out to pump that IPO, to dump those bags on you. And we all knew that. You guys were the suckers at the poker table. You guys were the mark. And again, you guys, everyone that fell for, just, it was so sad. And what's so frustrating is it doesn't have to happen. And we were very careful, but now we get to buy those space stocks at rock bottom prices. And we actually pretty much have a great idea of where the bottom is by watching SpaceX and another stock that represents that sector. And we have a really good idea. And I gave that update to my Weekend Elite members. And we're going to wait. And once we get there, we will come in and provide liquidity for the last few people that need to exit the market who bought at the top. So again, I'll be providing liquidity for people that need it, but not here. And I don't recommend buying them here at this point. And it's just so sad, though. There's so much bad information, and so many people get caught up on the propaganda, the influencer, the context. So just be very careful. And that's why I started my channel, was all the bad information out there. I saw this in 2021 in December, and I saw what was about to happen, and I couldn't keep my mouth shut anymore. And that's why I started my X channel and my YouTube channel, because in December 21, we saw the same speculation, the same propaganda, the same reckless buy the dip, the same just no maximum complacency. And I had to come in and say something, right? And I had to speak up. So I did that. And by doing that, we were able to, I think, the few people who followed me, avoid a catastrophe and then get in on stocks at prices that seem unthinkable. Palantir at the bottom, Robinhood at the bottom, you name it. So this leads me into my final segue is here. And if you want to join my channel, you can come to ElliottWaveSage.com to learn more. And I have in one of my sections, success stories, here, you can go through my success stories, and these are actually older charts. So again, I've been around for years. I didn't just start doing this. I didn't try to I'm going to take this niche and do it. No, I've been doing this for a long time. When I started this channel, I did it to just help people. I didn't care about making money. I didn't care about followers. I could care less about impressions. I didn't even check my impressions for maybe a year and a half. I could care less. I was just like, let's get this information out there, because it was so bad, the information I was reading, and it just made me sick to my stomach. Okay, made me sick to my stomach, the reckless speculation and the losses people were taking that didn't need to be that way. So so I created this system and channel to help people out. and to do that. So that's why we have grown and evolved, and now we have a membership based system where I can devote more of my time now because I focus on this most of my time. Not all of it. I do other consultant work, but I focus most on this. And the other thing is, I don't hide about who I am. You can find out who I am if you really want to look. But these are my credentials. I'm not, as you can tell, I'm not some kid in high school that's just like using AI to script this. This is my mind. No, there are no AI prompts. I'm just speaking from my inspiration that I'm getting put into my head by my own thoughts. I got training in a lot of different areas of business, and I feel like I can bring a lot of insights and ideas and help people. So that's why I do. That's why I'm doing what I'm doing. Okay, and I keep the price very affordable so that anyone can join. It's not geared toward an elite member. It's not geared toward just somebody that manages large capital. It's geared to anybody. $5 a month is nothing, guys. Most of my competitors will charge $250, $500 a month to start. Some 1,000. Okay, typically this is unheard of, and I don't want to ever have to raise the price. I can't say I may need to, years from now. There's always, hey, inflation. I ain't gonna lie, there's gonna be inflation. But my point is, we keep them low so that I can get the message out to everyone. Okay. And I do on-demand stock analysis as well, and do some more market research for people. And I really spend a good amount of my time looking at it fundamentally and the technicals, and give you my opinion on that. And I've done that for many people. We've had some big home runs on that. Some didn't work out, but it's what it is. We do our best. It's a tough market, but some of the ones that have worked out, boy, I was even surprised on some of them. And again, my feed is littered with positive feedback. Okay, and you can go through it. It's the problem we have with the market right now, guys, is we're in a top-in process. So because of that, it's hard to find really good, easy opportunities, right? The easy money is essentially over for a while. There's little bursts of subsectors that flare up, and we try to like get those, and then they like get squashed because we're in this like indice topping process. It's different when, years ago when we were lower. Okay, when we were a lot lower, right? Especially coming off of the 22 lows, right? All the massive small cap gains our channel made here. And even after 25, being cautious, not buying the very bottom, but being cautious, waiting for confirmation. And again, some people love this and some people hate this, what I'm about to say. But we didn't buy the exact bottom because we were concerned that the grand super cycle could have ended here. It very well could have, okay, at the April 25 lows. Okay, you can understand that. Okay, it could have ended here. And so instead of betting the farm on a dip, what we said is we're going to wait to make sure the cycle ended. And once we got that confirmation, the cycle ended, what we did as a group is we went into the other sectors and stocks the market had ignored that were still trading down at their lows, their April low, that didn't really move. They were kind of just flatlined. And we got in with the confidence to know the market cycle had turned. The investors were so fixated on big cap tech here, they forgot about the GDXs and all the other shit down here and the small caps, and we didn't. And so our gains through this period of time when we broke out here were much larger than just any buy and hold investor. And in fact, if you are buy and hold investor in tech, some of those have now come full circle, like Microsoft, and others will do the same, and you may actually end up with losses. Can you imagine that, by even buying those lows? That may happen soon to people, and that's why buy and hold is tricky, and if not, it's kind of something that you can't do without understanding the cycle better, which is what we try to do. So again, we always are thinking of risk, right? We're not thinking of just reward on our channel. All right, I appreciate it. Let's look at the market real quick through our our instruments here, and then I'll go into your questions. So tonight, as we can see, the futures are rallying, and again, if you really just zoom out, it's just noise in the system. Look, you can barely see it, so it's just essentially just not, to me, it's just noise. Nothing significant here at this point. It is a nice pop. Now the Nasdaq also trying to pop, but it's got a lower low here, and the Nasdaq futures. Now I don't look at the futures. Now the futures could be in a flat. That would push it lower. If it's not in a flat, then I would be looking at perhaps, again, just kind of looking at it, your connector right about here. Okay. And since it has that lower low, that would push us down. So that's a pretty good truncation. So typically we don't truncate that much with that much divergence, but the dailies are most important. So you do have the daily divergence arrays, but the 4-hour has not, and that it's still a little concerning. We would have liked to take that out. So I think there's a little bit of risk that this could fade. And then obviously the Russell, not much more interest rate dependent. Now we go into oil, a big driver. So we gave our members this box to say, okay, if oil's going to pull back, which we expected another leg down, we would rally. And we've already wicked out of the box, as you can see. We came into the box tonight and actually wicked through the box and came out, as you can see here, and we're coming out. So if you're a member listening tonight, if you get a rally and we go back into the gap, the way you want to trade this is take partial profit and then put your stop back at $83. Okay, because you either have to have the C done. If it's not, if it comes back down, it will extend through the box, and of course you don't want to be part of that, and then that would push us down to 77. Okay, so to me it's a little too early to move stops up yet, but it's something to watch tonight to see what happens for now. Okay, and then gold and silver, we were expecting another leg higher. We got that pop, and then silver. And again, this does not mean to buy it and based on our system. It's just me kind of giving you a forecast, because ultimately we believe the trend is still lower before we get to our final lows in gold and silver, because the dollar index is still looking to push higher based on this count. And in fact, we could be in a flat now on 2, and that could push that gold and silver trade higher in crypto as well down here if that continues. The other count we were looking at is this could be a 4, but you don't want to have too much overlap. We don't have any at this point, so this could still be a really tight 4 here and get a 5, and then a 1, and then get a bigger pullback in 2. So, but until this finishes, we would expect the markets to be under some pressure still. And the Japanese yen also is continuing to depreciate, which is a higher USD JPY. When this finally comes to an end, a big decision will happen, and I believe a big monetary policy decision will come out of Japan. We could be off by a swing, but we're getting close to a major inflection point within Japan's monetary system that could be the trigger or catalyst for even bigger, more selling potentially. Interest rates are pushing lower. We have it in this, again, another connector wave. Eventually, we expect it to go higher and then pull back again and go even higher. Ultimately getting into 5.7, 5.8, and then another big decision will come with rates, which we've gone over with our members. Okay, so that's kind of where we are with the market. So basically, we're looking at oil, the dollar index, and interest rates to kind of forecast where the market is going. If you have all three, if interest rates rise, oil rises, and the dollar rises, that's bearish alignment where the macro is being translated into the stock market. The macro transmits itself through those 3 instruments, and that will be very bearish for the market. And I've been saying that for months. Now it's all over the internet. I'm reading other people, talk about it, but my members knew about that dynamic months ago that was probably coming. And it is now arrived. Okay, now the question is, can it persist, or is it going to take a pause? Or are we going to get competing dynamic where maybe oil falls a little bit and we're in more of this taco era, another taco couple weeks, and the dollar rises, as data comes in more inflationary? We don't know, and that will create a very volatile, choppy market. So that's what I'd be looking for me to get the indices to accelerate higher in some kind of super 3 of 3 moon boy scenario. You need the U.S. dollar to make an about face and just collapse right now. Just do something like that, and you need that. So how does that happen? Well, that can happen through some kind of accidental hyperinflationary impact to the market. Okay, well, that's a black swan. That's not good. Well, Venezuela's market moons in hyperinflation. They all do that. So that could happen. And again, that could make your nominal value go higher. So that's one way. The other way is there is the summer of disinflation. I heard all over CNBC we're in this summer of disinflation. Well, if there's a summer of disinflation, my gas prices didn't see that today when I filled up my truck. I mean, it was pretty pricey. I mean, so I don't know about the summer and disinflation. So, but that's the new meme or propaganda slogan that they convinced people was going to happen. But if that was going to happen, and it would happen, then you would see the dollar drop, because then the Fed will loosen financial conditions. They would have a reason to do that, lower rates. So that would also pump the market. And again, the summer of disinflation is why people have piled into IYR, piled into regional banks, piled into the real estate sector, thinking there's some super breakout, and even SPYD. And if they're wrong, all those sectors are going to trap and rug pull people like ASTS and Rocket Lab did. But right now, I mean, you've got a dollar that looks like it's breaking out. You have rates breaking out higher, and you have oil prices higher. You have the UGA gas fund much higher. Why would we think there's a summer of disinflation? Who the heck writes this crap, guys? I mean, but people believe it because they want to believe it. They want to believe it. They have to believe it, right? They're looking for confirmation bias. All right, so that's all I want to say about the markets. Let's go into your questions, and thanks again for getting me super chats early so I can really look at your information ahead of time. So it's more accurate. Obviously, it can be more accurate if I'm able to look at it sooner. So let's go into that, and I'll get rid of my video. All right. Okay. All right, guys. Let's start out with the top. I actually had 10 symbols come in through my Stripe, which is another way. If you guys don't want to use YouTube and you just want to give, I get the Stripe request. You can do it that way. All right, whatever floats your boat. Okay, so we need to look at. Let me see where where we are here. I just got so many on our list. Look at all the symbols we go through. The other thing about our channel is we cover so many symbols. We have such a good look at the market because we're always constantly reviewing, hundreds of symbols over a period of several weeks. I mean, we're looking at so many symbols, and we catch a lot of symbols early before they move. All right, this is white fiber. Unfortunately, white fiber is decided to do a flat. Okay, and you see you've got the nice three-wave structure down. So now when we look at the flat, you could assume a 1, 2, 3, 4, and then 5, right? We could do that, and then it's done at C. Okay, but that would be a run-in flat. Okay, to see if it's a run-in flat, we need the daily. On this, actually the weekly. We need the weekly to take out this pivot. So to me, I'd be concerned it's not going to be that bullish. So I would be worried it's a 1, 2, 1, 2, and we go lower. The other count could be 5. We could go 1, 2, 3, 4, 5, and rally, but I bet that will fail. Okay, so that's the other possible path here. Before I go to the next one, and again, I've looked at these a while, so don't think I've only spent a few seconds. Like I've looked at these guys a while. Now, someone asked me, what's TACO? Okay, TACO is an acronym that stands for Trump Always Chickens Out. Okay, It's yeah, it's again, I'm not like I don't care about Trump. I don't care about Biden. I don't care, like we don't care about who wins or loses. We just care about the effects of the market and the psyche and how it impacts. So everyone talks about the taco. The taco is Trump always chickens out because Trump makes threats and then backs off. And the question is, does he back off because Aladdin, plays him and the love for the markets and changes his mind? Or is Trump the actually the tail wagging the dog here? Is Trump actually orchestrating volatility himself intentionally to enrich his insiders, and then he's laughing his ass off behind the scenes with maybe the same people he's battling? God forbid that that's happening. But in this world, who knows? Who knows who's what side anyone's on? But the point is, that's what it means. Taco means that is, and it's not an acronym I gave them. It's what the media has said, and it's just because it's kind of like and we've always seen Aladdin pushing Trump's button since his first administration with his tariffs against China and all this other stuff. So we've seen the taco just never, but now it got to the point where it's getting so ridiculous, so blatant. Now people are just calling it out. So it's either his love of the markets is being used against him by his enemies or people who want to manipulate public policy, government policy, and they're able to do it through swings in the stock market. And I mean, think about it. I can cancel a military invasion by a market sell-off on Friday because I can go short gamma. I can go heavy short gamma. Me and my buddies and my cronies, the Rothschilds or whoever you believe is Aladdin can go do that. And now Trump cancels the whole war. I mean, what power you have? Who's running the government, right? Or is just Trump in on it? Is this really? No one knows, right? But he does. To me, I think he has a sweet spot for the market. It's in his heart. I think he does base his he has a report card he gives himself. So I don't think he has. I don't think it's orchestrated volatility. I do think, though, he is a sucker for swings in the market, and they are using it against him. And he's got to find the courage to just give Aladdin the middle finger and do what's right for the country. And if he can't do that, well, then someone else will. And that someone else could be a Democrat or socialist president in 2028. So you better, this is what you wish for, what you get. So that's my political thoughts on taco. Anyway, all right, LAC is an interesting one. This Lithium Americas. We had this chart. Our count is coming to a box and it's coming to an end. So this would look like an area that it's starting to probably find buyers. And I believe you would. Look at all the support here. So you're going to find buyers here. Okay, now predicting the turn here, I think will be based on when the rare earth ETF as well as ALB changes direction. And you're like, well, it's not a rare earth. Why would that matter? Because the rare earth ETF has ALB in it. ALB has got lithium. It's got a lithium like component to it. So therefore, it's all interconnected. And to me, REMX and ALB have more downside. So I think based on that, we have to expect this to go lower, okay? But it does tell me perhaps the turn is closer than we think, at least maybe for the lithium part of the lithium rare earth kind of trade, okay? So that's kind of what I see. The other thing we'll look at is, has divergence erased on the daily? And it sure has. So you've got plenty of capitulation here. So for me, it's probably close to a bottom or a major swing low. Okay, would I buy it here? I mean, if I was playing the long game, I would probably start a position once it goes maybe down to 376, once it goes a little lower, or I see a sharper reversal, okay, a sharper reversal. All right, LAES, we've had this view. It looks like the flat has pushed and extended lower. So what happened is too many people chased it here. Too many people piled in at the top, and the market is rug pulling them. And look, and they're even buying the dip. Look at this, buying the dip, buying the dip, buying the dip. So you haven't got capitulate. So the market's just gonna rip their hearts out. So I would expect more downside. And of course, you need to stay above 198. If you've failed to do that, right, then we would be looking at some kind of a three-wave move, right? And this is an ABC. We'd have to make that a corrective move. And then we have a much bigger problem on this chart because we would have another leg lower, okay? And looking at this on the higher time frame, another leg lower to me, I mean, would probably get us all the way back down to these lows and probably even try to fill that gap. So you're looking at a penny stock at that point. All right, Transmedics, very interesting. We had this, we were always watching this, Transmedics, and then it made a fifth wave and we avoided it. So elite members may remember Transmedics, may not, but we used to I had this at one point and we were about to give the buy. I was about to give the buy and I was watching it break out. But then when we pulled back, we took this low out. And to me, it's like, boy, we made 5 waves down. So that can't be the bottom. So that's got to be A. We also know we never made it quite back to the 4. We never filled the gap. So we got all these problems with this chart. So I just deleted it. I said, you know what? We'll come back to it. Sure enough, now we're looking at it again. And here we are. And I'm like, oh, look at that. It's taking that swing down. So if I went ahead and said, okay, there's your A and there's your B. Now you need your C. It looks like it's ready to push lower and do the final push down. And the target would be 33.98. And that's right at the 4, right at the sweet, I call it the sweet spot. And again, this is also, look at all that technical support right there. So yeah, you've got strong support right here, confluence, and you would have a break of this trend, which would be a clear grand supercycle correction, a proper correction. And then you can start building a position. And we would actually cover that for elite members. So I thank the member for bringing this back to my attention so we can cover it. Now, if for some reason they want to rally it hard, it's not done yet. And guess what? It's still in B. And you know it could also make a huge triangle in B. And that would probably be my next thing I think about would be some kind of A, B, C, D, E. It does something like that. And then it drops later. So that's also possible. But I think for now, we'll just expect more downside. This Gorilla Technologies tried to correct the end of the cycle, but again, only made 3 waves and then failed and got this big push down. It looks inevitable that it's going to do a big double correction. Okay, and it does look like you have this trend line. It's finding resistance on the trend line as it gets pushed back every time it tries to break back above it. Here it got pushed back, got pushed back, got pushed back, tried to break out and got pushed back, and it got pushed back again. So it just can't get anything going. So my guess is it's coming back down in this larger double. And so the next target area would be around 564 and maybe as low as like 426. And again, we want to see daily divergence arrays, which you've almost have done. You probably will do. So I think that's what I'd be looking for. As long as you stay above the 24 low, this chart is sound. If we break that low, then what happens here would become a larger connector, a bearish connector like this. And then you would take a whole nother leg down. Essentially, it's go to 0. It's bye-bye. Bye-bye, Gorilla. Okay, this chart took me a while to study. And I'm confident in some ways, but I would be careful trading the structure so I have no level to trade on this, but I will give you my thoughts on it. It's a very tough chart to trade. As you can see, if I zoom out, it's got a very erratic middle area. So we have some kind of A, B, C, some kind of B, and we have another A, B, C. So you've got basically like this flat and a flat structure. And as the C wave builds, you have a lot of overlap in waves, okay? And that's fine in a corrective structure like this. And if I break it into 3 wave subdivisions, to me, that's an end and diagonal C wave, which is fine as well. And then we would just call it over here, and that would put the B in here. But it doesn't have to do that. It could pull back just like it's done here. Okay, and 3 waves here. And then what it could do is make new highs and go higher. And the C could extend, and this could become a 1, 2, 3. So it is very tough. I don't think that's going to happen. Okay, I think my experience from trading these types of things, as I think that would be an outlier forecast and permeable. As you can see, I have a clean break on the weekly cycle. So to me, it's a clean breakdown. You're in a new weekly cycle trend lower. So my guess is a B is in, is done, and now you've got to make a clean 5 waves down, and you're going to have to take out this low if it can even survive. Because as you know, some of these stocks go to zero, they go bankrupt, they don't come back. It's not really an instrument I would ever trade, to be honest. Now, on the shorter cycle, we have almost 5 waves done here, so we could see a bounce in 2, right? You see the bullish divergence. So you may see a bounce coming, a rally, but I suspect that rally is going to fail. CPNG, if we look at CPNG, it looks like it needs just one more leg down here, and then it finishes its structure, right, that we've had identified. And again, we just need that last little bit, and we need to stay above $9. It's probably coming back somewhere around $13, and then we'll want to see a reversal. Again, you want to see daily divergence array. So this is the problem here, is this has to come all the way down. So you've got you're going to have a surprise move to the downside coming. That's going to shake people out, and that will be probably where the low is, as long as it can stay above this low here, and then of course build higher. ASST really hasn't gone anywhere. In our original idea is still valid, and we've basically gone sideways, up 5, down in 3. And when we look at what's happened here, it's very much just the middle area, and it's too tight of a wave to try to look at. I mean, I could probably see 5 waves in that, but typically you would see some kind of divergence. You don't see it. So I think you got to be open to the fact that it makes a larger double correction potentially here. And you have some kind of WXY. So W, X, and then Y, and it comes back to retest this low. But it's possible it may not do that. So it's totally in the middle area. And as long as the key level at B holds, the idea is sound. Okay. And it is a little concerning it hasn't been able to do much here. Okay, so, I mean, it is concerning. Looks like 5 swings down, which would mean the trend is lower, which means I think the best forecast here would be another leg down, something like that, and something like, something like that, just to give you an idea. Okay, so the other path is it's this, and it's A, B, C is another one. And I don't think I'll go with that path. I'll go with this one. So I think that's what I would expect. Now BTBT is, we've had this mapped out for a little bit, and it looks like here we have one more push down that we're in the middle of, and it just needs to stay above 53 cents. It's just got a little bit more downside. As you know, we are aware it can whipsaw around, so there's no guarantee that it's just going to drop straight. It could if the trend continues as I've shown, but in this area it can easily whipsaw back around, but we expect another leg lower. No matter what happens here, it's likely to break this low, 124. Once it does, the move could end. In fact, we could even end it like this. There's a possibility. Again, I'm just speculating. It could even do that and just have a 5, just a little bit. Just as long as wave 3 is not the shortest, and be done. So we don't know, but the best way to look at this is just watch it and see to yourself, when does this end, right? When does the cycle end? And we can get more aggressive, okay? Now, when we look at this on the larger time frame, we have a lot of higher highs here. Okay, so this has a high probability of coming back up where my cursor is, but the path can be very tricky, and we've even seen paths before where it comes down and breaks this low slightly, and then they whipsaw it back up in a little mini monthly bull market, and then they drop it again, right? And then they pump it one more time for the real big move. So this is really tough to nail the exact bottom. It's just going to be obviously tied to crypto cycle, which may or may not be close to finishing its cycle that it's in, this monthly cycle correction that it finds itself in, our bear market. If the bear market persists lower and goes dramatically lower, this is likely to go much lower. If 57,000 is the swing pivot, then I bet this doesn't go very far, and this is pretty much at the lows. EQPT, looking at this again, not a lot of history. Looks like a nice little 5-wave move with a B. So we would just expect another 5-wave sequence. And we can even anticipate a box here at 966. Okay, so we'll be looking for a 3-wave dip. The problem here is it's never been in a bull market. It's just gone down. So we also know that if it's going to bounce, it's going to be here. If it fails, it's going to become like a go to zero, because then it's going to do this, and it's going to fail. And then, of course, it's going to rally because you're going to have 1, 2, 3, 4, 5. And then we'll rally again. And then it will have a massive meltdown. And it will pretty much be reverse split city. Okay. Or go to zero. So which one is it? We don't know because there's no history. There's no history. But if you had, again, the inkling desire to buy it, this would be the area to speculate in it. Or you can just wait for the reversal, right? You could just let it come down, see that it reacts here, boom, and then just buy the first pullback, boom. Okay, go long. Then you can just hold for the bull market, right? And then for sure, right? You're in a new cycle higher instead of like trying to guess the bottom. All right, thanks for that big super chat. That was a big one for me. All right, BCHG. The question is, what's your sell target this coming cycle? Good opportunity if it falls below $1. I believe it's very good speculative opportunity below $1, like it was back here. And essentially your stop loss is 0, but that's okay because the upside reward would be significant, right? As you saw here. I mean, look, it went from $1 to $24 almost. And guys, our channel caught this trade, by the way. We caught it. Like we're about to catch it again, okay? Now, unfortunately, we had a better setup. Now, we may have a setup later. See the low was here, and we had to come off of the low, and we bought that first, again, the first pullback. We may not know exactly where this ends, but when it does end, we probably will get a similar reaction, just like you saw here. And then guess what we'll do? Once we get that first pullback, you better believe we're going long, just like we did here. Same ideas, same strategy, same playbook. Okay, so it really depends on your risk tolerance and your time horizon. If you're willing to wait and you have you're not worried about putting like a huge amount of money in, stop loss is 0. You can make 20 times your money. Okay, you don't have to put a lot of money in for that, right? So you just do it. But stop loss of 0 means 0. You could lose it all. So it's kind of like a stock that's a call, essentially. And so this is what we're looking at. And the sell target here, again, if we want to just dream about what it could be, I have it already up here. Look at that. There it is. Probably $33, $35. Okay. That's the sell target right in this box, somewhere in that box, with probably some kind of crazy ass wick, because there'll be a squeeze. And we'll see if I'm right. We'll know in the years to come. We'll come back, just like we come back and reflect on this box, right? We had no idea, guys. This is why my channel is around. This is why I have people that are still subscribers to me, because we remember the good old days. It's the problem is the market trades in cycles, and we don't get these big moves every, so often, right? So it's just unfortunate. Most of the market is speculation, is kind of at a top. There are some few things. Crypto will have a substantial bounce soon to counter trend rally this, right? Because remember, if people shorted crypto at these peaks, they need to cover, and they haven't done it yet. Okay, they will. So there's going to be another monthly cycle. Okay, even if this will go to zero, it's going to be a monthly cycle. So we know there's always two sides to the market. Okay, and we have seen Bitcoin Cash breaking out with higher highs. So we'll see where it goes. So this is kind of the forecast right now, something like that. MSOS, do I see it falling below 3? Okay, when I look at this structure, we have 1, 2, 3 waves. Okay, I can look at this as, okay, it's a higher high, but it could also be corrective in 3 waves. One of the clues to see if it's corrective is, did we erase divergence or not on that peak? As you can see, we did not. So typically, if this is a corrective peak, like some kind of A, B, C, or WXY, the divergence here would exceed this divergence because you would squeeze, and that's how the move ends. So you didn't do that. But the daily cycle may not be representative of this because of the degree. So we'll go to the weekly as well. And then when we go to the weekly cycle, we see the same thing. So my gut tells me it's probably going to go higher. Okay. So my gut tells me this is probably going higher to squeeze people out. Now, the question is, what's the path to get there here? That is the tough part, because we just don't know. So we don't know, and it can have multiple structures. The one I'm going with is the one you see here. Now, with the X wave, I can put that here. And if I put that here, that means we're in Y, and it means we're almost close to the bottom. And we have erased divergence. So there's a chance that Y is done and that 2 is truncated. Now that's a massive truncation, by the way. Okay, massive truncation. So I'm like, do I really think that's going to happen? I'm wondering, but what I'm wondering is, could the market do this? Something like this. And we've seen this before. And then when it does that, and then come down, I think it can do that. Okay, so that's kind of what I think could happen, just like I have here. But ultimately, I believe until we get worried about $3, these lows breaking, you need to finish this sequence. So I think I'm going to go with this view for now. Do I see $3 breaking? It would, I mean, I could come up with a structure that makes it break, but it would be an outlier structure. So I think it's a low likelihood. Okay, do you think LTCN will survive if LTC falls to 10 or 20? I think it will. From in my opinion, I think it will drop significantly. Right, the premium will be, it will trade below intrinsic value. Right, which is typical. I don't know what price of Litecoin LTCN is traded at right now this second. I'm sure there's a way to find out. It probably will trade at 80%, not 70% of net asset value. It'll be undervalued. So, but this is our view, and I believe it would be okay. And the problem though we have with Litecoin is Litecoin's been a money tree for the whales, okay? And that's why it's gone nowhere. It's basically been funding the whales' Lambos, okay? Unfortunately, the whales could have not been as greedy as they should have, and they could have let it keep moving, and then it would have caught more people, would have been able to get more momentum. But their short-sightedness and greed has now destroyed momentum to the point where now it's going to be crushed, and they'll be crushed. So I keep saying that Litecoin needs whales to panic. When the whales start panicking and selling, like Ripple did. Remember when Ripple had that massive panic? You're going to need a day like that where it's essentially in free fall and collapse. Okay. That's what's going to happen. And I believe that's what's going to happen. Okay. I believe that's what's going to happen. And when it does, it will be buyers will step in like they always do, and it will be saved. Now, what I think is happening here, you see how we broke this low, but more importantly, we broke that low. Okay, so to me, we have opened up, again, I don't have this updated here, but basically, we have opened up a 5-wave move down now. Okay, we've opened up this 5-wave move down. Okay, down like this. Okay, we've opened up a 5-wave move down. Get rid of this. And the problem we have here is, again, get rid of this, is we're going to have a flat now. And this is the worst case scenario. Okay, this is the worst case scenario. All right, you got a flat. So my guess and what I'm thinking is we at least got to come down here. But if you look, there's no chart support anymore. So either you've got to find support at 20 bucks. If that breaks, you're basically going all the way back down into this consolidation range, single digits. Okay, so we are below the trend line. Like there's nothing bullish about this right now. And again, it's the whales did it to themselves. Their own greed collapsed their own money. Their golden goose. They killed their own golden goose. And so now they'll pay the price because now no one wants it. It's a money. Who would want to trade a stock, a crypto that has zero momentum, right? Zero momentum, right? Zero momentum. So what I think is going to happen, again, I'm just showing you what I think will happen, is we'll have 5 here, and then we'll probably bounce like it's doing now, a little bounce maybe. And well, actually we have two paths. It could bounce back up to 61 and get destroyed, or it's a 1-2, 1-2, 1-2, and it's about to collapse. Okay, so it's one of those paths. Okay, now do I think the 5 can be done? No, you haven't extended it, and it's too short in time frame. Let me look at the weekly. Yeah, I mean, if it's finished here on the flat finished here, it'd have to be a run-in flat. Again, I'm always looking at all the scenarios. I'll consider all options. Yeah, I mean, it's very suspect. Like normally you would get a little bit bigger capitulation. So yeah, we don't have that capitulation I would be looking for. So I would avoid buying this right now. We'll let this play out. Even if we don't get the exact low, we need to let this play out because my gut tells me it's probably a 1-2, 1-2, 1-2. All right. All right. And then next question is on grab. Grab. I always go through everyone's comments at the end. So if you're asking questions, I'll get to them. I go to the super chats first out of a respect for them since they're paying. Grab here. Let me see. Okay. Grab. What we like about grab is this higher high. Okay. I label it in this kind of corrective way, like I show here. But I could even go 1, 2, 3, 4, 5. Okay. Now, when I look at it, we have some divergence. We have some divergence. So I don't think this is some corrective wave. either that's mislabeled. So I think this will recover, like I have shown. And so we had a buy here, was a good buy, and then we come down. Now I haven't looked at this in a while. So again, it's really interesting you brought it to our attention because this does look like 5 up from that low, clearly ending the cycle, right? This bounce clearly ending the downtrend, right? To me, clearly ending it. Clearly ending the downtrend. So I would think at least we get another swing higher or the low. So yeah, I mean, buying it here and putting your stop at 317 seems like a no-brainer type of trading idea. The only problem you could run into is if you go into earnings on, I get, which is not, we're not near earnings, but if earnings and we were trading at support, you're at risk of a significant gap down. So you hold in overnight on an earnings release and on major support like this would be very risky. But since earnings is such a long way away, I don't see the risk reward calculation to me looks acceptable to buy it and just let the market push you out. And if the market can push you out, I mean, you could get up to $8-9 from where it is right now. All right, so do what's best for you. But I do like the setup, and we will be bringing that to the lead members. All right, thanks. All right, North Isle copper and gold had a really tricky chart. Gold is correct in a larger cycle. Copper is suspect. Copper is in a correction, and the question is the correction almost over, or does it have another leg? So it's very tough to correlate this instrument to the sector ETFs. So I just labeled the chart as it is. And so based on this labeling, I'm looking for a 5 here, because what we want to see is, I'll go to the monthly cycle because that's probably most relevant, is you see how you peaked with no divergence. You should make another high with momentum divergence. And when you do that, that would be the 5th wave. Also, when you make this final high, it'll have massive bearish divergence on the weekly, indicating the 5th wave. So for me, it has maybe one more push higher and then another big pullback, probably back down to the same area where it's found support here. And then it could probably have a much, the big advance out. So that's what I would expect. But again, it's tricky because I was looking at it and there was possibility that the 4 could go a little deeper, and I don't think it will. And then the other possibility was, well, are we actually done 5 and we're correcting the whole thing? So it's a really tough chart. I'm just giving you what I think is based on my experience. And typically when you see this kind of tight consolidation, and typically that's like a 4 wave of distribution, profit taken type wave, that's typically what I see. Okay, and we'll just let this continue. If for some reason you do come back and break below these levels, then you can look to buy it, right? Buy it at around 161, 142, and you could play that bounce, and then we would call this 1 2 at that point, right? And then we would just have this swing. We would have to put the 4, like maybe 3, 4, and 5 right there. All right, Reddit. Reddit's been very frustrating for long-term investors because it's been so erratic. And I was looking at this, and what's interesting about Reddit is when I was looking at this here, if I try to put back where we are on the structure, let me go. Yeah, here we go. There we go. The weekly. Okay. So I look at this and I'm like, it's just right on the trend line advance. I don't think this is, what I'm trying to say is, I don't know if that's a new connector or not. I don't think it's a new connector. I think it's part of the final cycle down. And that's very important because it's going to dictate where a bottom is. So I don't think this is a new connector, even though it's pretty large bounce. So I just think it's part of the final leg. And it's just 1, 2, and he has another push down. And we'd be looking for it to push obviously lower into this box, maybe somewhere around $100 or so. But I think what's most important is this daily divergence erases. So what we want to see is when that push down comes, you take out that divergence. And then wherever you are in this box is probably the area where it could turn again and make another turn and have a bigger, another move higher. Okay, now we look at this structure here. We only see 3 waves up. That's highly unusual for a bullish stock to do that, right? Normally, we see impulsive moves, right? So you so for me, for 3 waves up, right, we could see another move higher. Some stocks do move in 3 waves. This may be one of them. The other is it's a 1 2 1 2, okay, as well. And I looking at that, I don't think I would call it a 1 2 1 2. So I think we got to label it as 3 waves and see if we get this Y or not. The problem with 3 waves is the boxes, we could extend through the box. So the best way to trade Reddit is wait for the turn on this leg when it ends. When this finally ends, this leg will turn, and then you can try to buy the pullback wherever it may end up being. But right now, it's not really an area I want to play around in it with, even though it's been very exciting. We don't like this lower low here that it made. And that was a fortunate tragedy of the chart. Zcash, we were warning members about a potential flat. And that may still continue to be played out here. And so the question is, what's your sell target next cycle? Okay, so right now, I'm still concerned of a flat here because we did not get 5 up on this. Okay, so we need to be very careful. Now, what would invalidate that for me would be is if we could come back and take out 42.34. If we can't do that, this flat's in play. And then it's likely coming back down, maybe down to $10 or lower. Okay, single digits. Now, if that happens, that would be a great opportunity to pick it up because of the flat. Now, where does it go from here? Okay, so once this correction finishes, we've made a higher high already. As you can see, we weren't able to break out. We weren't able to back test and hold. In fact, it had 2 failed breakouts, right? So maybe the way to draw it would be kind of on a slanted line like that. Okay, again, I'm just giving you my thoughts on it. And you have this big cup and then perhaps some kind of handle here, right? Some kind of handle. Again, we don't know exactly where the 5 wave's going to end. It could go deep, it may not. But basically, you're going to have this big consolidation. And then at that point, you break out. So once we break out of that, right, where does it go from here? It's probably $100, right? Easy $100. And the third wave, again, you can look at the fractal of the third wave. Here you would have 1, 2, 3. The third wave is substantially more than the first wave on this, based on the fractal nature. You even saw it on the downside. I mean, here you got almost to the 7, 2, 3, 6 extension. Okay, I mean, a similar extension on this would be incredible gains, right? It would be, I mean, breathtaking. Like, you're looking at $340. Okay, so that's a 10. That's beyond it's a 10 bagger here, but it could be more. So that's the possibility, right? That's the ultimate pump based on what I can see. Okay. AMC here. AMC question is, thank you. I appreciate you like my work and you appreciate watching me. All right. So, and it's good that you watch my updates. I really do appreciate that. Thank you. Thank you. Lawn Rescue. Okay. So AMC has got two paths right now. We were expecting a double into the box and then another leg higher, but it looks like it truncated. I mean, honestly, when you look at it on the 4 hour here, I'm sorry, here it truncated. You see how it truncated? So there's a possibility that B is done way early, which usually means it's very bullish when that happens. So I'm just counting an impulse up, but we would need to break this high with a squeeze, a race and divergence. So if we make 5, we'd likely see another pullback and then another big move higher. So that's the path I think we could be in. If we break above 246, I believe you'll get something like this, or you can even get a 1-2-1-2 and just explode higher, a race divergence, and then a massive decision comes, whether it will stay corrective or impulsive. The other path is we come back here. Oh no, we're not done early. And what we have here is an A, B, C, right? And of course, that'd be off by a swing. And we put X here, and then we come back down in Y, and then we still hit our box in B, and then C comes later. The sign for that to happen is if we come back and break below 211. Right here, the market has not decided. So I think either path is possible. I think if it breaks below 211, you're going to get this bigger washout. If you break back above 245, you're going to get a bigger breakout. And that's what I would be watching for here. Okay, I think ultimately, no matter what happens in this erratic path, whether it's up and up or down and up, I believe you need another leg higher here with a squeeze type move, media attention type move. And then it may be that may be it for a while. Okay. All right. So I got through my super chats that came in early. Now I get to go through the other ones that came in while I was talking. So Coinbase, got Coinbase and Snap. We have not looked at Snap in a long time. That's interesting. Okay, Coinbase. Coinbase is like most of crypto. It's a real nail biter. It's ready to either end a major cycle or have a major meltdown. It is like, again, it's like I can look at a picture and see what I want to see. Okay, I can see what I want to see, right? If I can look at a picture, right, I can see what I want to see. And if you guys don't know what I mean by that, let me see if I can do a quick example. Let me just move my screen back. I'm going to show you guys something. And this is important. This is important to point out because this is how your mind can play tricks on you as a trader. Let me see if I can find this image I want to share. And again, let me see if I can find it here. Yeah, this is the one I'm looking for. Oh, that's too big. I got to get something a little smaller. There we go. This will work. Okay, so I'm going to move my screen back. I've seen. All right, so we all seen this picture. Maybe you haven't. Okay, so when you look at this picture, what do you see? Do you see an old lady or do you see a young lady, right? And everyone will see something different when they look at this. Some people see an old lady, some people see a young lady, and some people may not see any image. So my point is, when you look at sometimes you look at these charts, you see what you want to see, or your mind is kind of biased to. So I've used this analogy before in my video, and people are like, "What do you mean, old lady, young lady?" So this is what I mean. If you're new and you haven't, this is what I mean. So this image, and you can kind of see the young lady's face. Young lady's face is right here. That's the nose of the young lady right there. That's her nose. That's the young lady. The old lady, this is her nose right there, and that's her mouth. The old lady's mouth and the nose, and the young lady's nose is right there, right? No, the young lady's nose is right there, and that's her hair. So you can kind of see if you can play around. You can pause and look at it. But basically, what I was trying to say, Coinbase is like that. Do I see an old lady or a young lady? And again, I can look at this and see what I want to see. I mean, I can see a very bearish chart here, a very ugly chart. Look at this overhead supply. You're on major support. Once this level is breached, I mean, it is lights out. It is goodbye, adios, go to zero Coinbase. And again, this is A, B, C. This would be a flat, a giga flat, right? Because this flat would become, again, look, you have 5 waves down. So either you would extend 5 or you would have a 1, 2, 1, 2, 1, 2, and you'll crash, okay? And you will go below 31, below it. The other path is it's a run-in flat and it's done right here. It's done. Could you imagine that? If it's a run-in flat, well, then it's go time. Coinbase, and that means Ethereum's at a major low, and hallelujah, it's alt season, guys. I mean, that's so no, it can't, right? No, it can't be that. Or maybe it's a hybrid, right? Maybe it's a little bit of both, but it's not so bearish like now, but it'll be bearish later. So maybe you get something like this. We have a 1 and you rally in this 2 for a while. See this 2? Maybe this goes on for another year and a half, and then this 3 and 4 come later like that. That's what I'm thinking is going to happen. Something like that. You see that? And then you see this 2 goes all the way to 27, maybe even to 28. And then it goes down. And that's the Bitcoin sideways bear market analog. That's how Coinbase kind of looks. So it's a big moment for it. Right now, at this moment, we have not ended the downtrend just yet, but we're close. It looks like we're close. We're close, but we're not quite there yet. The market is not spoken yet. I mean, it is real close though. So again, I'm trying not to be super bearish, but buyers just aren't stepping up right now. Okay, they need to. If they can step up and break out more, with like more momentum, then we would call that in and we would be building a new cycle higher. And then we would be correcting the entire decline. Okay. And earnings is Thursday. So perhaps earnings is the catalyst for this instrument. Didn't its CFO or somebody leave or something? Didn't they lose one of their executives, I thought, recently? We have to check that. I'm looking. Well, I don't know. We can look into that. I thought one of their executives left. Okay, Snap. Let's go back and try to label what we have. So we put that 5 there. We'll put that 3 there. Put that 4 there. We'll put this 5 here. Put that 3 there. So we're really close in Snap to a bigger market reaction. Okay. It looks very close, but not quite there yet. Okay. So it's just taking more time to play out. That's what these bear markets do. And it's below this massive area of supply. I'll show that in a minute. So 1, 2, 3, 4. So again, this looks like it's got more downside, right? It's got to finish that. Now, and now the problem this thing has is you are below the major low. You're obviously correct in the grand super cycle. You have 3 waves down, 1, 2, 3. And again, it's what's going to happen more than likely is when this finishes, is what I think is going to happen. You're going to rally. It's probably going to rally all the way back up to $7. And what do you think is going to happen? It's going to get rejected. Its ass is going to get rejected, right? And it's just going to get that's what I think is going to happen. Now, if it can make it back above this area and hold it, that's very significant. And then we could start talking that this too is in and we're in a new bullish advance. But for right now, this is very dangerous to be long. Okay, let's look at the higher time frames. Weekly cycles, very bearish, and you haven't even erased divergence. So see that you haven't even had capitulation. People are still buying the dip in this. They have not given up. You're going to need them to give up. You need that to happen. You need to take this out. So you don't have, you still don't have capitulation. Too many people are buying the dip. There's still too much hope and optimism. And that's what's driving the selling further. But again, look at this left shoulder, head, right shoulder, and you have a neckline breach. No matter how I draw it, it's a breach, and it's a sinking ship. I mean, they gotta do something very different with their business. Something has gone very wrong fundamentally. But technically, they're going to be oversold soon, right? You see that they're going to be oversold. They're going to have a bounce soon. All right. Circle is going to be very erratic going forward. It's unfortunately going to be jammed up in the wild swings, I believe. All right. So there's this connector wave we find ourselves in. The connector wave here can I'm just reading what someone said with all due respect. I'm not sure. You got my attention with all due respect, Raj, Allah, Maslat. With all due respect, are men and women in uniform? Are men in uniform? Iran just said they will not stop the war until an American soldier dies for every Iranian civilian that was slaughtered by U.S. Guys, the charts predict the war isn't going to end. Okay, we know that. Our charts are predictive, right? We have predictive charts. We can use. I mean, I could start a new YouTube niche called predictive charts, right? And talk about what the future is based on our charts, and kind of speculate and dream about what the future looks like based on our charts. Our charts are telling us oil's going higher, rates are going higher, nothing's going to change. So I would assume the taco or whatever the heck's going on is gonna fail, is gonna change, right? We know more than likely Trump is not gonna tuck tail and leave, right? The war is gonna get worse, right? Is what I think, because the other alternative of tuck tail and leave is the petrodollar era comes to an end. The dollar will go down and collapse, and that's not what we're seeing. And the only way to fight that would be the Fed doing massive rate hikes, emergency rate hikes to save and bring people back and to save the currency. And I don't know. Maybe they'll do that if that were to happen. But I don't see the Trump taco in the charts yet. The hype we see gold and silver aren't responding, right? They're still responding to a tight Fed. They're not. It's not, we're seeing the dollar rise. We're not seeing that the market's not pricing in like a hyperinflationary like outcome, a dollar collapse out. I'm not seeing that yet. Okay, so I don't think, so yeah, I don't think the war is going to personally be over. I expected the taco to last at least until Monday or Tuesday. God, if it's over already, again, I'm not checking the news, so I don't know what's going on right now, this instant. But anyway, we'll look at it later. Okay, A, B, C. So this C could push higher. It could end as I have here as like a run-in flat, and then we could finish Y. This is like the direct path. So this is the direct path. This is kind of like the direct path correction, and it just ends. So I've been labeling it that way. But as you can see, this isn't ideal to have this truncate like this. So typically, you could also push higher. And if we push higher, right, then you've got to push higher here, right? And then that C wave pushes higher and so on, right? And we would get rid of this ABC. So it's very erratic. Like it's very right now it's going to be very unpredictable. I think the best course of action is to assume the direct path. Just assume the direct path is going to happen, the shakeout into C, and then it ends. And then if it starts to bounce again, we can go into a more, elaborate, consolidation, like, where it's up and down and up and down. Okay, and then QXO, let's take a look at the QXO. Looks like we've done that one before. Let's see what's going on here. So QXO is jammed up in a flat. It looks like it should probably be almost over, right? It looks like it's almost over. 1, 2, 3, 4, 5, right? A lot of divergence there, almost too much, but that's okay. Yeah, that's fine. Let's look at the label here, what we have. This is an A, B, C. Okay, so this is like an ABC. So let me just look at the subdivisions a little more carefully before we just call it done. It's perfectly right before. I mean, it's right at the sweet spot we like. That looks like the 3 of 3 right there. Yeah, I mean, this looks good. What do these guys do? The wholesale distribution? I'm not really sure what they do in terms of. I'm just looking at them. Looks like probably 5 there. A, B, C. 1, 2, 3, 4, 5. So maybe another 3 here. A, B. Yeah, I don't know. See, I don't like that little structure right there. Let's look at the bounce. Definitely still a 4 wave. So yeah, I think we probably just, it's hard to see the subdivisions in that wave properly. Maybe we can go 1, 2. Just kind of looking at it one more. 1, 2, 3, 4, 5. Yeah, I think we're, let me look at this wave real quick. Oh, it's divergent. So yeah, we have, so this 3 is here, is there. Yeah, it's just you can barely see the wave structure. Just kind of looking at it. It's just like a 1, 2 right there. It's just real small 2 wave. Okay, and then here you've got some kind of 1, 2, 3, 4, 5. So yeah, I mean, it looks like it's almost bottomed, but we never trade the count because we can always erase divergence and go lower. So what I'd be looking for is a sign of a reversal, a big candle higher by the first pullback. Okay, but I believe it's going to bottom pretty much any minute, very soon. Okay, very soon. See, it's in the box here. It's in the box. So yeah, and it's going to probably finish anytime. LSE E-Star Resources, how much upside over the next 5 years? LSE, let me see. Oh, E-Star, EST on LSE. So the problem is it's never been back above its high on this chart. And unless we've erased divergence, and we have, what do you know? That we're not sure it bottomed properly. So for me, it's close enough that it's, I'll consider this a major low and some kind of 3 wave move down, ABC. Let me just look at it one more time. 1, 2, or actually probably WXY would be the right label for this. Something like that. Okay, and then that's probably another WXY. So that's a major low. And we made a higher high. It looks like 5 waves here, and it is. So based on that, we should probably continue to grind higher. But it's probably ready for a correction soon. Right? It's ready for a correction. So I would be expecting a pullback. Probably back down to $3 and then more upside. The problem is over 4 or 5 years, you have really no way to gauge that because you have no history to base it on. So there's really no way to know, right? There's no way to know. If it goes parabolic, it could actually be lower than where it was in 5 years. If it goes linear, a linear trend, it could be, 15 or 16. There's just not enough data to forecast it correctly. There's no way to know. I mean, if you just try to extrapolate the current trend, we can try to do that. Just assume that it stays on this bullish trend for the foreseeable future, right? We have 2026. So 5 years would be 2031. So we're looking at $10, right? If we just keep a linear trend. All right. So, but I would expect it to continue to try to grind higher. But as you know, a lot of times these instruments go more parabolic and then they fail. So the path will likely, my guess is the path will likely be something like this, where we'll come back up to here, find resistance, consolidate again, perhaps hit this trend line, and then try to build out like that. That's what I bet will happen, something like that. Okay. But really, it's hard to say. There's not a lot to go with here, but I do think it's a risk for a correction. Obsidian Energy, OBE. And swing exit zone after binary recent lows. Okay. So here we want to look at very interesting chart pattern. Look at that right there. Isn't that interesting? Look at that potential reversal pattern right here. But look at the fractal. This is interesting too. It had almost the same pattern here. And look, it failed. Imagine if it fails. So we'll have to judge it and see where we go. All right, so we have a little bit of divergence there. Obviously, the only way we're really going to properly analyze this is to just trend it off the major low. Off the major low, we only see 3 waves, but we see divergence, which means it's likely to go higher. Okay, and looks like an ABC here. And my guess is that's probably some kind of 1-2. Yeah, see a real tight 4 and 5 up here. Can't even, it's not even worth labeling it. But it basically, you have an impulse here. So now we expect another leg higher. The question is, where's the swing low? Now, as long as 2 stays above 538, it's valid. But now you see you already have this reaction. You have this connector. Yeah, I mean, this looks like the most important low, but you haven't made 5 up yet. So this is like kind of in the middle of no man's land, because again, we have a corrective wave, but we also have a corrective wave here. And now it's either going to make that 5. See, a lot of energy stocks only have this look right now tonight. You're either going to make this 5, and then you're going to pull back again, which would give you more confidence that 2 is in, or it's going to do a double correction. Right? It's going to do a double correction, which all of energy can do, guys, by the way, and that is unlucky 666, right? Unlucky 666 is the target. So it'll be a small box. So which one is it? We don't know. So my guess is watch what happens on Monday, and if you can take this high out, that would be encouraging. Then you can put that 2 in, make 5, you have a lot of bearish divergence, and then you'll correct. If you can't and you just drop, it's at risk for a bigger double. And in fact, it could even be weak. More than likely, it may not even make it down to that 666 level. It's probably just going to come down and truncate and run those stops, and then swing out hard, reverse out hard. So I think it's going to be up to what happens And at this point, we don't have any clues. So the answer the question, what is the exit zone? It technically, and you'll hate to hear it, it's all the way back down at 538. That's the zone where it's like abandoned. It's done. There's no more. It's that fractal I showed a second ago. It's gone. But that's a big risk from where we are. So I don't know how to trade it from here. The way I would trade it from here is, if I had no position, I would wait, make it do the fifth wave. I see that, and then I would buy the first pullback and 3 and buy it against 11. That's how that would be what I would do. If we don't get this and we just start to melt down, then I would be if I had gains from here, I would leave the market and wait. If I didn't have gains, I would just stand on the sidelines, wait, let this play out, and get more data and reassess the chart later. So yeah, because you can't say that's the most important low either, because I told you it can just truncate that low and still move higher. The most important low is really this low. This is the most important low. Because believe it or not, whether you truncate or come here, it's likely to still rally to new highs. So this would just be a tremendous opportunity that if you leave here, you probably just buy it again here. And the risk is they truncate it and you miss it. Or you can wait for that truncation and then just market buy it when you see the reversal. And you can beat the market maker at its own game, at their own games, if you day trade, which is what I sometimes can look at and do. If I'm in front of my screen and I want to get in a position, I'll play where I'll go in and out on the market maker. I'll just like, okay, you shook me out, and then they revert. I'll just get back in. Oh, you dropped me again. I'll just get back in, and eventually they just give up, and then they mark it up. And I don't, it's just kind of a weird game. Because they're trying to shake out the longs like scrape you off like barnacles on a ship, so they can, get the ship moving. They want people out of the trade, right? They want your money, so they'll do those kind of things. So anyway, that's all I can say on it. The most important level is this level right here. Okay, that to me is the most important level on this chart, because if we break this, then you have to say it's corrective, and it's just there's no other explanation. It's corrective, because then you could say, well, it's a flat. Well, if it's a flat, well, then you would come down. Then you're coming down to these lows, and that's basically a stop loss of 0 at that point. So anyway, that's all I can see in this chart. So my thinking is, if I was looking at it, maybe what you could do is that 4 hour. Watch that 4 hour. And you could watch this trend line. Maybe not watch price, but watch the RSI. See that trend line? If that trend line breaks before you make that new high, then it's likely to come down and break these lows. If you can make a new high and have that bearish divergence, then it's likely to hold this low. So maybe you can watch this trend line, because if this trend line breaks down, right, and this Stochastic RSI breaks down, and this high has not been taken out, then I would expect much more downside. And perhaps that's your signal to leave the trade, and then you can get out much earlier, right? So that's another way of looking at it. Okay, so let's keep going and see if there's any other questions here. EOSE and KULR. Yep. EOSE and KULR. All right, let's take a look at these. So EOSE. All right. So again, I was just it's interesting because we expect at some point a capitulation low. The question is, were we going to get a bigger bounce before that happens or not? And we're still in the corrective wave. We're actually still in the fifth wave. All right, but you can see how we erased divergence there. So this obviously became a 1-2, so it's extending the A wave. I still think you're going to get this bounce. So I think it's just extending the wave down, okay, is what I think is happening. All right, so we can kind of try to map it out and see where it's heading. 1, 2, then 1, 2, 3, 4, 5, 3, 4, 5. So then you put 3 there, 4, or 4 there, and now you're in 5. And let's go to the 45-minute chart. And now we could try to see where this fifth wave ends. And here, I like the divergence. Now, what you don't want to see is this come down and take out that, because then you're going to have another 1-2 here. You're going to have a 1-2, 1-2, 1-2. Then you're going to get a much bigger move down. Then we have to start talking about that there is no bounce, that you just have 3 waves down, W, X, and you're already in Y, and you're finishing up the whole thing. So that's the clue. So whether you get B or not is going to be up to whether or not that divergence erases, in my mind. And the 45-minute is getting a little dicey here. I mean, it already has taken out these levels, but as you can see, this level is still in that's a hidden divergence. That tells me there's risk for more downside. So yeah, I think we got to be careful now with this B wave. It looks like it's starting to melt down a little faster. If it's going to save, it needs to save itself like very, very quickly. Like it cannot really afford much more. It's gotta stop, and then we gotta get a bounce if we get it. And then again, that bounce is highly likely to fail whenever it happens and go even lower. All right. So I think right now what we see is the cycle could end at any moment and get this B wave. But if we see that divergence erase, if we see any more downside any further, then we have to go with a more WXY bearish structure. And then we'll go with like an ABC 1, 2, 3 of 3, 4, 5. Okay, and then just finishes. KURL, let's see where we're at with this thing. Looks like it did a double correction here, obviously. Or what are we in? Let me look at it. So we have a flat. So we have 5 down. 1, 2, 3, 4, 5. Yeah, it's actually almost done. So you see what's tricky is, oh, that could be done. That's 5. But you see how it extended the 5 further. That's what flats can do, guys. That's why we never trade the count on a flat and just buy the 5th wave on our count. This is a good example of what can go wrong, right? If you buy the 5 on this flat, it could just extend the flat even further, a whole nother leg, and that's what it did. And so you always have to kind of wait for that confirmation, and then look to get long, right? And you need to see that like a more of an impulsive move off the low. So looking at this, I just want to look at this. Yeah, that's okay. 1, 2, then 3, 4, 5, and then 5. It's a pretty big bounce though, right there. Almost erased divergence on that, but that's the 45. That's fine. See, that's a 4. So that's good. So to me, the 4-hour looks good. So this looks like it's coming to an end. It should come to an end very soon, or at least get a bigger rally. And of course, it has to hold 196. All right. So this is, boy, they really are destroyed the chasers on this one. Does have a lot of chart support here? It's got some chart support at 243, 240, right about where it is, a little further down. And overnight it's trading higher. I mean, it looks like perhaps a little bit like a bounce and one more low. I mean, like the bounce you're getting tonight is 4 and you get a 5. All right, it's very close based on what I can see. All right, let's take a look at next question here. And just kind of my my feed has got to refresh something with YouTube. Just give me a second. My feed's got to refresh so I can see your guys' comments. All right, I think I got these coming up here, so I can use this. Use my other screen. All right, HYMC. All right, Highcroft Mining Holding Corporation. I think it's coming back. Good. Okay, it's back. Hopefully my live stream didn't break up. All right, HYMC here. I think we were expecting some kind of pullback, if I remember right. Look at that, it's in our box. It's in our box. But is the box still valid? That's the question. So we were expecting this kind of pullback. All right, we're calling it an ABC correction. All right. So I mean, we know the gold miners are close, but they're not right. They're not there yet. So yeah, as long as you're on you see, you're in the bear market. You're in the thick of the bear market still. I mean, there are a few gold miners in boxes that we monitor, but since the GDX and GDXJ are not, we expect them to go lower into the box, and I think you should expect the same thing. So I would expect more downside until the GDX hits the box that we expect it to, and it's lower from here. This bounce looks like it's maybe just one of five. I'm sorry, two of five. So I mean, technically, I could go 1, 2, 3, 4, 5. I could end it there. I very well could, but my gut tells me it's gonna probably do this and extend that 5 down further. So you got that gap. My guess is you're gonna fill that gap. Hopefully my live stream didn't get messed up. I'm just looking at everything. Yeah, can someone just confirm everything looks good on my live stream? My Streamlabs looks okay, like nothing's wrong, but the YouTube's all glitching out. I also look at the YouTube as I'm watching it. So just put in the comments everything looks okay on your end. So okay, so let's see here. Anyway, I'll just keep going. I'll look for the comments later. Indo. Okay, everything's good. Okay. Yeah, I wasn't sure something about Google Flake, but I use Streamlabs, and that's pretty, that's my main platform. All right, Indo. We are looking for a bigger pullback here. We have 5 waves. Our weekend update, we're expecting a deeper pullback back down to 265, somewhere there, correcting this wave here. The only bearish count I could come up with, I could possibly come up with here is I'm just kind of looking at it. Since that bounce, I mean, this bounce corrected the whole decline. for sure. So if we were to come down and break this low, we would have to put that X here, and we'd have to go A, B, C, running flat, and then stop loss rate. So, or we go to new lows, and again, remember the major low that has to hold is at $2. These other lows aren't that important, even though we still have them. So I think for now the most bullish count is this right now, and we were expecting more downside. We were expecting the taco, right? We're expecting a taco, and we got it. So I think this is what we're looking for, and perhaps it can reverse at 266. Okay. All right. Hope that helps. That's what I'd be looking for on that one. And then Soundhounds is close to our one. I don't know if I say close, but again, taking a lot of patience to get to where we wanted it to go. It's been taking a lot of patience, but I think patience will be rewarded. All right, Soundhound, we have a 1-2-1-2 count. We have a 5-wave leading diagonal, and we see this black line. We drew that black line once we saw the cycle end. And believe it or not, guys, on our channel, once we broke that lower low right there, we broke that low, the forecast updated to this very bearish view, and it's been right. It's been taking a long time. And of course, right at that point, right here, I said the most likely path it's going is down here. And I still believe that's the case. And so looking at it from a chart standpoint, right, we have 3 waves down, 3 waves up. And now you have a W here. So you have A, a B, and a C here. Let me just look 1, 2. Well, yeah, WXY. So yeah, I'm right. A, B, C down. So W, X, Y. And then AB, right? So the dilemma is the shorter cycle here, because it could do this. See how we got 5 down here? Okay, we erased divergence, so maybe not. Maybe not. So if that's the case, oh, that's why. My bad. We're in a WXY structure, so we have to update it this way. ABC. Let me see how big that bounce was here. Still the same cycle. So then 1, 2, 3. So 1, 2. So it looks like it wants to do that 3 of 3. So it's at risk for substantial decline. Okay. And however, we know the market makers could be really tricky. They could try to spike it and then drop it after one more pump to 744. It may not just be a straight line down, but we expect, and our channel has expected this for quite a while, a more downside, okay, into this box. Our box is at 365, but we love to see it at 245. That would be the sweet spot. That would be the most ideal area to see it turn and bottom. Okay, I can't promise that will happen, but I think based on, again, my experience in doing this, is typically where it goes. All right, but I can't guarantee it. No one can guarantee it, but we do expect more downside. Okay, and then let's keep going. See the next question. Okay, a new coin, Stellar Lumens Moon. Thanks for joining and being first time. It's okay. Yeah, everyone's figuring things out. That's fine. GRTUSD. All right, crypto. Graphcoin. I remember this one. Oh yeah, Graphcoin. I wonder. I mean, I haven't. I don't think we've. Let me check and see if we have this thing charted, because again, I've a lot of the crypto already charted. I remember a long time ago, maybe. GRT. Yeah, I guess we don't have GRT, so we'll have to add GRT to our library. So let's add GRT to our library. GRT USD. Why don't we use Kraken, because maybe it has more data than Coinbase. All right, 21. I want to see which one has the most data. I know it's kind of a fairly newer coin. Maybe Coinbase is okay. I just wasn't sure which one would be. Look at. Yeah, it looks like they're all. It looks like it's a 21 coin. Okay, so we'll just use this one. All right, so below the major low, you see 3 waves down, and then you see a corrective bounce and another low. So right away you're like 5 waves. It's 5 waves down, right? That's the first thing you would think of. But if this bounce is too strong, it may be a WXY, a different structure, not 5. And you can see how strong that bounce was. So I wouldn't label it 1, 2, 3, 4, 5. I would label it as ABC connector ABC. Okay, and that's how I would label this. So A, B, C, and then A, B, C, something like that. And of course, W, X, Y. And then you need another 3 waves down from here. So let's take a closer look at that. Yeah, this is a 3-way. So it's another. So in here is a WXY as well. A, B, C. And you can see that because you can see the divergence here erased. And then up here, it also erased. So this is very much a 3-wave move. A 3-wave move. And now you need another 3-wave move down. And that's your capitulation wave. That's where everyone gives up. Right? And it can have a proper low, even though you think it should be lower. So now we need an ABC here or a 3-wave move down, and we go to the higher time frames. So we do see a lot of capitulation right there, right? So when we look at this, that could have been the low. I could have said there's the low right there. But see how we made a low even further down? And you see how this bounce was very insignificant? We have an impulse. So this is impulsive coming down. So Y will extend lower, but we're going to probably get a rally soon. I suspect we're probably going to get a rally soon. And then that rally will fail. And that will be your final leg down. And this is A, B, C, D, E. And then that's your 5th wave. Something like that is what I'm thinking. Although, you see how we erase divergence. So maybe what we could do here, again, let me just look one more time. Let's go to the daily. Let's see if the daily also, yeah, see how we erase divergence there? So it looks like, it looks like a triangle, but it's really not. It's really a series of 1s and 2s, for more 1s and 2s here, or 1, 2, 3, 4, 5, and then you have another 1, 2 here, and then you have another 1, 2 here, and then 1, 2, 3, 4, 5, another 1, 2, and then you finally got your first 3 of 3, and there's your next 5. Again, I'm just trying to do this, see if I can make sense of this ugly chart. 3, another 4, here, and then you have 5 there, and then there's your 3 of, there's your 3. See, that could have been your low right there, and there's your 3. See, that would have been your low, but it had to go do another wave down. So the sad thing is, the good, I think it's likely to rally soon, as you can see, very soon. but it's more likely than not that rally's going to fail. My guess is that rally's probably coming back up to 5, 6, about up to here, and it's probably going to get rejected. Okay. And what's going to happen, again, this is what I suspect, and you're going to get some kind of A, B, and then it's going to make another leg down, and then you'll get another chance at finding a low. But I think you've got a bounce coming soon. It'd be unusual to not bounce. But some cryptos, I mean, we saw like some like Luna, they go to, some of them, sometimes they go to zero. So you got to be careful. But this is the forecast as of now that I would give for it. Okay. Interesting. Interesting. But I do think a rally is coming soon. But that is likely to fail at some point. Likely somewhere in this area. All right. MPLX. MPLX. Looks like we got this mostly right. I mean, don't remember when we did it last, but I mean, everything seems to be lined up nicely. So again, see all that divergence right there. What's interesting on the weekly cycle, you see we peaked here and then we corrected. I wonder if that correction's already over. No, I think it's about to end. See all that bearish divergence right here? Very bad. So my guess is even if it makes another high, it's probably a flat. It's in danger of a correction. It's in danger of a correction, and that correction should take it back down, down to $40 or somewhere down where that 4 is, somewhere down here. That's what I would be looking for. Okay, I would be looking for a pullback, and the only way to talk myself out of that is if divergence is erased. But what's interesting here is you see this RSI dip right there. It like corrected that whole leg. And but it's too bullish to assume that, because then we would be looking at that point a 1 2 1 2 1 2, and the stochastic RSI does support, let me see, a reset of the cycle fully. I have to go to a monthly. Let me go to the monthly and look. Yeah, I mean, so what I see in the stochastic RSI here is a 1 and a 2, and then I see a 3, and then I see the whole cycle corrected right about up in here. Let me see if I can line that up right about there. So yeah, this is tough. That put it right about there. So, and I would never do this. I wouldn't label it ever like that. That would be silly. So we would label it as a 1 2 1 2. Yeah, I think this one could be way more bullish than I have considered. So this, as of now, I think we have to consider something a little different than the ones and twos. All right, until the market proves otherwise. So because it looks like it's about to erase divergence. Remember, it does have a lot of bearish divergence, but it looks like divergence is about to be erased. That's what it looks like to me on my chart. And again, I can be wrong. I've been wrong before. And it won't take much to do it. Boom, and it's out. Three, a freaking three right there. I mean, so yeah, I think I wouldn't recommend selling this nor timing the market on this. So I think this is it. So the more this is the most bullish view. This view stays valid as long as you stay above $53, that pivot. If you lose that pivot, then it goes back to the previous count we just had. This is 5, and we drop back down to 40, and it's still bullish in the end. But I think based on what I saw, it seems like you had a massive cycle reset here, and everyone bought the dip. So the price barely moved. So the only other count I can come up with is this really bullish count. All right. So good luck on that. Is oil and gas pipelines? Well, no wonder. Yeah, no wonder. They're probably going to be building pipelines all over the place now, right? I don't know where do they operate. Let's see. United States. All right. Interesting. Okay, well, we'll see if this plays out. Good luck. Hope it works out. All right. Next is AEVA. Eva, Deer. Deer, we definitely know Deer. And Fleur Solar. We do know those guys. All right, now AEVA is trying to come off of this correction. Let's take a look at what happened here. Looks like it made 5 up from this area, from this view, but I couldn't. No, let's look. Hold on. Let's see here. So we've got 3 up here, and then it didn't no double, so we're still in X. So the X wave did a double higher. Looks like 1, 2, 3, 4, 5, A, B, C. So it looks like did this. And then this turned into a huge just a huge connector. That's what I'm thinking. Yeah, and the divergence is we're seeing it because the wave is so long and the C wave needs to be in 5. So it is what it is. And as you can see, we're breaking down. I believe we're about to go over under the major trend line. See, we just breached it. You see that? It just breached it. So this is likely in play now, the final leg. So we need 3 waves. You see how this leg made a big bounce? So somewhere around here, you're going to need a bounce and another low. So the question is, I mean, this could be the bounce. I mean, we sometimes in these capitulation waves, you get these real tight bounces like that. The other is this, they whipsaw it back around. But basically, more downside is expected. We need to take out this low, and you need to erase divergence. You need to take out these lows here on the daily RSI. And then somewhere down in this area will probably be the bottom. And we now looking at the structure, we can forecast a box on this now. So by pumping, it allowed us to maybe get a box. Let's take a look. So that'd be too low. So we'll be looking for 381. So it's a very small window, but it is something to shoot for, something to put on your screen, your watch list. So again, that's a substantial more downside, but this was expected, right? This erratic move. It just took a larger connector to get there, unfortunately. Deer is looks like it's about to go into our parabolic advance that we've anticipated. Here it looks like we've got some kind of run-in flat potentially. Let's look. 1, 2, 1, 2, 3, 4. Well, yeah, 3, 4. Look at that. And that's a 5. So maybe not. It wasn't impulse. Just a huge a 1, 2, a 1, 2, 3, 4, and something like 3, 4, 5. I mean, 1, 2, 3, 4, 1, 2, 3, 4, 5. So maybe actually put that 3 there. That would be better. And then this is a flat. This is a flat right here. A, B, 1, 2, 3, 4, 5, C. And then you have the next cycle higher starting. And we know that because ag's been breaking out, right? All the wheat and soybeans and even sugar's about to turn higher. They're all about to move higher. So yeah, I think as long as you stay above this low, but it looks like once you take out this 642 is go time for deer, go time. Okay. And we are looking at deer in a very bullish light as a one, a 1-2, a 1-2, a 1-2, a 1-2. The RSI supports that. That's why it's so bullish. I won't waste your time proving it. And you can see we drew this parabolic like advance, and it's held, 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 held. So that's why we're expecting it to maybe go parabolic. As long as that red line, as long as we're on that side, right? So we were getting a little worried, but when we were in this flat, we are getting worried. We're like, okay, it's gonna fail maybe, and then that would really shake up the chart a little. But it is succeeded so far, and it looks like it's ready for its moment, right? Its breakout moment. It looks like it's ready for its breakout moment. So here's another example of everyone's focusing on, I don't know, NVIDIA or whatever, but no one cares about this stock but you and my group that are listening. And this looks like it's about to break out in a massive run. A massive run. That's what this looks like to me. I mean, we saw Caterpillar run. Why can't this run? Right? Caterpillar went parabolic. Why can't this go parabolic? Right? It can do it. Right? The market's crazy right now. Right? Even value stocks get pumped now. Right? Cyclical stocks become bubbles now. So anyway, there it is. Is once we take out this level, I think 3 of 3 is born. If we for some reason come back and break this low at 575, it's going to create a bigger double correction in 2, or it can even be even more bearish. And I can step back and zoom out. We could even have a 1, 2, 3, 4, 5 and come back down to 420. Okay. First Solar, unfortunately, isn't so lucky, I believe. First Solar is probably jammed up in a flat on a major cycle, which kind of sucks for long-term investors to have to wait again. But that's just part of the deal. Too many guys out there chase it. Too many knuckleheads chasing it, and YOLOing and seeing a breakout. So now we got to sit through this freaking flat again. So yeah, I mean, it's in a flat, I believe, and we see the solar ETF TAN in a very dangerous count right now that shows perhaps substantial downside is possible. This is a race in divergence. So yeah, this is unfortunately, it looks like to me it's in a flat. I'll study it a little closer here in a minute. Okay, just to see what the RSI is up to. I didn't look too much at it because I wasn't ready to, put it. So one of the things you can watch for the flat is if that line breaks. Once you break that line, it's in a flat. And again, you'll be correct in the 2012 cycle, guys. The 2012 cycle. So this is a huge, major cycle flat. This is a giga flat. Okay, if this breaks, and it's likely to do that. Now the weekly cycle is breaking obviously the 25, but the 25 cycle is only in 3 waves. That's why we think it's a flat. Now the only thing that could possibly be more bullish on the short term, you see, we just crossed over on Friday. So the only thing that could save it is a run-in flat. Maybe it's a run-in flat. But if it's a traditional flat, we should come back down somewhere around 118. But my guess, again, my intuition and my experience at doing this tells me it'll go a little lower, or maybe in your world it'll be a lot lower. But my guess is we're probably tagging this trend line again, and that's probably like $80. Okay, but look at the big picture. I want to show you the big picture. You have a massive cup I don't know if you even call that a handle, but you would call it whatever you want. Basically, a huge consolidation, and you've got basically a higher high. This B took out the all-time high, the 2008 high. Okay, and I remember First Solar back then. Everyone was all talking about it back. I remember, right? I remember First Solar back then, and then this happened. So this is a flat, but this would be a 1-2, 1-2. And what does it tell you about the future? Again, predictive charts, right? My new YouTube channel going to be called Predictive Charts. It tells us solar is going to be where it's at. Guess what's going to everyone is going to be in solar. Solar is going to be freaking everywhere. First Solar is going to be a FANG stock of the 2030s, late 2020s, guys. That's what it tells me, right? Right. And that's what it's saying. It's saying, look, it's saying on the grand super cycle, it's going to have a big bull market in the future. That's what it's saying. But right now, there's a lot of pain. Why? Because solar hates higher interest rates, because people use financing to finance solar projects. And if rates go higher, it sucks. Now, also, natural gas prices are down. So energy prices are, power is natural gas, right? So that's the competitor for solar. So if natural gas is cheap, why buy solar? Natural gas is expensive, I better buy solar, right? Those are the things, right? And of course, the data center bubble, with AI didn't help, right? Oh, we're going to have solar panels all over the data center, roofs and shit. Like, okay, well, that bubble burst. So now there goes that. And so now you're just left with what? What's the narrative? So that's what's happening. And of course, a lot of the solar, raw materials, they get from other countries and stuff. That's a problem. So you got these headwinds, but the best thing to keep solar higher in the future is actually the worst thing for society. Higher natural gas prices, higher energy prices, but perhaps lower rates, or none of those, and you get subsidies from a more democratic administration, right? Because it's no secret, Democrats love to finance climate, improvement type projects like this. And obviously, this is something Trump cut, right? All the subsidies, Trump got rid of those subsidies. He got rid of that most. So there is no, and a lot of states are too. And some of it's political, some of it is they're just out of money. They can't fund that anymore. But perhaps in the future that funding comes back for some reason. But anyway, this is the chart. But we see more bearish price action, and just gonna have to be prepared, to hold on tight. And I'm surprised we haven't got a bigger counter trend rally yet. But who knows? I mean, we've seen bigger crashes and flats before than this. All right. All right. Then the next one is GME. Yeah, GME unfortunately is breaking down, and the CEO didn't really do a good job on CNBC. Really didn't do the company that well. But I don't know what his intent was there. But we're looking for one last push down, as you can see in the chart, and then a major low somewhere in this general area. If we just take a step back, we have a massive consolidation, a big area of support that's likely to fail very soon. And once it does, it should produce more heavy sell-in. And we would want to, maybe looking at it, maybe we see $14 somewhere around there, somewhere around that $14 area. But ultimately, it needs to stay above the major low, which I think it will, right? And then it should, have at least another cycle higher. So it's hard to see the labeling of this. You just have to trust the chart, or you can go back and pause it. But basically, we were trying to play on a breakout, but now that the market had made its move, again, it's like from a technical standpoint, the can got kicked down the road as far as it can go, and now it's kind of at the end of the road. Like you're gonna have this structure is at the end of its line, right? This structure is at the end of its line. It's either going to break out or break down. And to me, it's showing signs of breakdown, not breakout anymore. And it's getting very close. Let's go to the weekly cycle. So the first clue would be right here on that major pivot. You can see we just broke down on that. If you can see that, we just broke down, right? And that's why we left the trade basically, and that would end this cycle here on the 25 cycle, and then that should actually eventually end up breaking the 24 line as well, eventually coming down and taking all that out. So that's what we expect. And then, of course, the monthly cycle would do the same thing, right? The monthly cycle. In fact, I didn't really draw this, but look, you see that monthly cycle. Let me make sure I'm at the right low. I think we should use this low right there, that low. There, we're right on the trend. Look at that. We're right there. So once that breaks, then you're in a much bigger correction. Okay. So yeah, we're going lower. Okay. In my opinion, I'm going lower. I think we're on the verge of something more bearish. I just don't know what the catalyst will be. We were hoping for more upside, but most of the market doesn't look that strong. On NG and Boyle, natural gas is that net? Oh yeah, natural gas. Um, NG is in a box, but I don't like what I'm seeing here. I don't like what happened tonight. But we do know that the major, even though we have this box, the real low is here. It really has to stay above 248. So if you're trading this and you are comfortable with the risk, that's really where you want your stop. If not, you could have a stop loss raid, and that's all that may be tonight, a stop loss raid. Here, let's take a look. Daily cycle. See, we're about the risk divergence again. And to me, it's actually still in the same corrective cycle. So it's still not. So I would still call this 1, 2, 3, an a W, X, Y. Let me see here. Let me look at this one more time. 1, 2, 3, 4, 5. A, B, C. It's A, B, C. A, B, C. So I call it an A, B, C, and then some kind of 1, 2, 1, 2. Have to be something like that. So that's what I would be looking for. Okay, something like this. And I mean, we should see a reaction higher. If we don't and that breaks, well, then where the whole chart has to be flipped, and it would take me a lot of time. But basically, if that low breaks, then this structure here that I have as WXY, and let me see if I can show it here, WXY is a corrective structure. And instead of impulsing up, we'll double correct. We'll come back and break 1, 4 and likely have a huge 1, 2, 3. Okay, so now gas stocks will get creamed. The only thing I will caution you as a natural gas trader, and I mentioned this risk, is coal. The stocks in the coal sector look like crap. Okay, they look like they're going to get much more downside. Coal is related to natural gas. They're in the same kind of, they have the same purpose, power and power plants. Not again, now coal they may be used for other things, but for right now, so I would be, like I said, nat gas is not some slam dunk trade because of the war. Okay, there's something, got to be careful about this. That's why it's not risk free. This one is high reward but high risk is what I want to say. It's high risk, high reward. Boyle would probably look the same way. And honestly, Boyle here is I don't know if I have it labeled. Let me see here. Yeah, my labeling is gone. There's a reverse split so much. I mean, let's take a look here. So Boyle, again, I look at it. Obviously, it's in a correction since September 21, and this is some kind of your 3 of 3, your 4, some kind of fifth wave, right? This is some kind of fifth wave. And right there is your 3 of 5. And there's your 4 of 5. And then this is your 1, 2, 3, 4, 5. Again, you see I can do this so quick. 1, 2, 3, 4, one more low. So this looks like it needs one more low in the structure to finish up, right? One more low. And then it should be all done. And where's it doing overnight? 21. This could probably make that low tomorrow. Again, I wouldn't recommend bottom fishing it, but you know, that's the count. So that's an Elliott wave count. Again, I just went through it pretty quickly because I was using the RSI to guide my labeling, which is what we do on our channel. Which some Elliott wave people hate that because they view it's like, you know, kind of sacrilegious, kind of like, you know, I should be stoned for doing that. But I think here, like I said, like your 3 of 3, your 3 of 5 of 3 is right here, right? So that's your 4. So then you just count down and you could just, fine. The only way to invalidate this view is if you take out divergence. Once you erase divergence, that invalidates my count. But as long as you're making bullish divergence each step of the way, eventually the market will reward, you know, you'll have another cycle higher. Now look at this. Does this look natural to you? This looks like Aladdin type manipulation, doesn't that? Do you think a market that's free and totally random and just, you know, open to, you know, buy and sell like inorganic or organic demand, this is manipulated. There is no way that's a natural thing. That's so somebody is playing around with natural gas, guys. This is crazy. Look at that. That to me is not normal. Okay, so to me, there is obviously somebody's able to play around and manipulate the natural gas market prices. And hey, good for them because they're keeping you know, cost of utilities down. But eventually they're going to lose control of that manipulation, right? That's what this chart says. And prices, guess what? They're going to revert to where they should be. So I bet in 5 years, 4 or 5 years, natural gas is going to be a lot higher, right? It's going to be a lot higher. It's just unfortunately, like, how do we time what's happening now? But I'll tell you this, if we are close, if this chart is right, then Boyle makes its final low tomorrow. And guess what? It pumps on 3 and it doesn't look back for years. That's it. So this could be that's what I say, it's high reward, high risk though, because if you're wrong, ooh, you've got a lot of downside. But if you're right, you've got a tremendous amount of upside ahead of you. So I guess you just have to do what's best for you if there's something you like to trade. I personally, I like to be long natural gas, but I'm playing it through the stocks. I'm just going to play it because, you know, for whatever reason, I don't have a lot of luck trading the futures and the Boyle and stuff. Like I'll just play it through the stocks that benefit the producers and distribution, transports and that thing, because this has been the most frustrating thing. And now I mean, yeah, if it's being manipulated, then how can you fight that? No wonder. Because I'm like, I mentioned this before on my channel. I said natural gas is the only chart where my system really doesn't work that well out of all my things. And I wondered why. So you wonder, I guess it doesn't take into account manipulation. So there's something weird because that RSI, that is not normal on a monthly cycle to have a flat line like that. I don't know if you can find me one chart of a major market where it's done that. I don't think there's one chart I can find like that. Okay, let's see if I think I got through everything. A couple more. Celsius and Ampex. Celsius is kind of in a backing into the low count. It really can't afford to go lower. Now, the good thing is it's not in the XLP, as I've been told. The bad thing is it's kind of jammed up here. It's got to stay above this major low here at 2142. Now, I look at the fractal nature. You see what happened here on its major low? It came, see how it did that stop loss raid right there? I mean, it did this little stop loss raid right here. That wick. So that wick, you see that? And look what happened after that stop loss raid. Boom. Okay, so I wonder if that's what it's trying to do here. And gonna so I wonder if it's trying to do some shenanigans, right? The market makers are gonna do that, and they're gonna freaking pump the shit out of this thing. So I think you need to be prepared for that. What I would my advice here is trade it as a 1-2-1-2. But if the market brings it down and breaks this low, just sit back and wait. And then if you see a big reversal candle, a big reversal, or a wick, and you're back up here, just market buy it. Just go back in and buy it. Play them at their own game, right? See how they tried to do it a couple times. And again, if they try it again, you just do it again, and you just keep doing it, because that may be the game that they're trying to do here. Okay, we already saw they did it here. Look, you could have said the same thing. Oh my God, it's a head and shoulders. Holy shit, it's gonna collapse. And look what all they did is run the stop loss, and then look at the markup it went through. Okay, it could happen the same way here. So play the game while they're at it. So I'm not saying like open up your stop. I'm just saying if you're long here, okay, let's say you do get stopped out, or you don't, or you don't want to take a position, just wait. Let's just go through this. See if it happens. If this bounce doesn't happen, okay, you don't go long, just let it melt down. It'll melt down. But I have a funny feeling it's going to do a stop loss rate. That's what I think is about to happen here. And what that will do is a risk divergence and double correct the market, just like it did here. WXY. See, 1, 2, 3, connector, 1, 2, 3. And my guess is it's going to do the same thing. 1, 2, 3, connector, 1, and I bet there'll be a 2 and a 3, right? Or, yeah, or, let me see. Hold on. Let's hold on. Let me look. Or 1, 2, 3, connector, and then 1, 2, 3. So yeah, I think that's what it's probably going to do. But for the short term, you see all that divergence, and my guess is it's going lower, because that's 5. So even if it rallies, it'll go lower, or they're just going to capitulate. My guess is it's just going to capitulate and go lower, and then stop loss rate. That's what I think it's going to do. Okay, that's what I think it's going to do. And then this was an X up here. You're in a Y. And then this was some kind of ABC whipsaw around. Okay. That's what I think is going to happen now. Yeah, I think what we'll do is I'll label it again. It's kind of torn. I think we'll label it this way. And then 3 waves down from here. And then here in that wave, let me just check that wave. Yeah, actually, it's an ABC. Yeah, and then we end this here. And then, so yeah, it's my hunch was right. So then you do WXY. So that's what I think is going to happen. So this was the low. Believe it or not, that was the low. And then they just decide to do a double because they want to, take your money, take your shares away. Okay. I guess, this isn't this company being sued by like Texas and stuff. So it's got some like negative sentiment around it right now, right? For hurting kids or something, kids hurting themselves, drinking it, but they'll get through it. Guess what? Those kids are going to become adults. Guess what they buy? They're going to keep buying it. That's what they do, right? Just like Monster, right? Right? You know, Gen X, millennials love Monster, right? Gen Z loves Celsius, and Gen Alpha loves Alani Nu. I mean, this is what it is, guys. My Gen Alpha kids, that's all they drink. They want this Alani Nu shit. Okay, Alani Nu. And then my Gen Z kids, they want Celsius. They don't want Monster. Monster is like for grandpas and grandmas to them. So able to buy it, just gonna have to hold this through this. I doubt it's going to zero. Now we do know that Costco is trying to come out with their own brand, but again, this is about brand loyalty, right? Do you think, again, my kids, they don't know what the hell Costco energy, they're not gonna buy Costco energy drinks. Okay. Again, Costco energy drinks, that's for the boomers and Gen Xers, right? But I mean, so guys, this is the I'm sorry, the Gen Z and Gen Alpha drink of choice. Okay. And that's why they're after them, because it's hurting the kid. The kids are hurting themselves drinking this shit. But because they don't know how to stop drinking, or parents don't know how to control it, because they just keep drinking it. All right. Amp X was solar. I don't think it's like solar. I put it in the solar ballpark. Let me read what it does exactly. It's energy, I think. Yeah, lithium ion batteries, aviation, electric vehicle, light electric vehicle. So it's kind of like a battery, EV battery type play. All right. So almost took out this high. We have 3 waves down, and it looks like 5 waves up to me. I just have to update this chart. Let me see. All right, so I'm just kind of looking through it. So yeah, I mean, it looks like it's a flat on 5 waves. So it looks like yeah, we were trying to label it like corrective coming out, but I believe the right way to label this is an impulse, a good old fashioned impulse. I think that's the right way to label this. 1, 2, 3, 4, 5, because it has a very impulsive look to it, and that gets us to here. So that's why I think it's a flat now. Right? I think it's a flat now, and looking at it here again, it's got, and what's interesting, it almost looks like 5 waves down here, doesn't it? But erase divergence. So probably a triple. Let me go to the 45-minute and look at this a little closer. This wave here and this wave. Yeah, maybe I got the 5 wrong. Maybe it's not a flat. It's probably this then. 1, 2, 3, 4, 5, and this is an ABC. It's the only thing I can think of, and then it's just a normal correction. So there's your 4. So your target is going to be like 749. So let's see if we can find a connector. That's probably your connector right there. So that's going to push us deeper though. But I mean, I guess we're not surprised given how bullish it was. And I mean, damn, that's all the way back down to $2. So we won't think that's going to happen, but it could. So see, right now we're showing 5 waves down. So what I think is that's probably not the real connector. My guess is here, this is a 3, 4, and 5, right? So you have a 1, 2, 3, 4, 5. So what you're going to make is A, some kind of B, the real connector, and a C later. So my guess is something like this. Okay. Remember, we have EOSE. It's kind of like battery storage like. It's not EVs, but it's battery storage going with a B. So maybe there's going to be a little battery storage fever coming, batteries and energy storage fever, because I think we've charted a couple of those kind of stocks that look like they're going to have some counter trend rallies coming. Okay. Well, looking for something like that. All right, AMD and SanDisk. AMD is really in a interesting spot, because if it can take out all-time highs, it definitely is interesting. So let's see. So I kind of just drew this round and top for the hell of it, and so far it's holding it up. And if the count, again, we never just trade the count, but if the count is right, 1, 2, 1, 2, 1, 2, 1, 2, overnight, it's not above 540. I mean, this shows a massive collapse is coming. Okay, like imminently. If this count plays out, it has to get validated by taking out 563. Even if it rises up to 553. So really, the bears are it's a massive battle. If the bulls could take out this pivot, it should go to new all-time highs, and then this wave 5 will extend another cycle higher. okay, which would get us a 1, and then 2, and then, 3, 4, 5. Very bullish. That would mean the SMH is probably going to new all-time highs, which is, we do have SMH forecasts to do that at some point. But if the SMH makes that bigger dip before that happens, then this goes down with it. And my guess was this will go down. The SMH makes a wave 4, SMH makes a fifth wave higher high, but this makes a higher low. This never comes back and takes out this peak for a long time, if not years. So it's very dangerous, and we know the fractal nature of AMD. The pumps almost always go back down to the beginning, not so there. So I can't, I don't know the fundamental reason why anything like this would happen, but right now the market is making that decision. That's why I said, if you're wanting to understand where the market's going, you got to watch the semiconductors tonight and where it's going, not oil, semiconductors. Because it's but the SMH can break out, that will keep this going, and then you could probably pump this another leg. If it doesn't and the SMH collapses, this will collapse. Everyone who fought to keep it alive will be blown up. Anyone who chased it here and here will be blown up, and you'll have panic selling. And pretty much the whole pump will unwind. Okay, so it's at a very critical moment. Okay, it's a very critical moment. And ultimately, again, the fractal nature of AMD is its pumps always retrace. When it's finished, it always retraces the whole pump. Okay, we've seen it throughout the history of this stock, especially in its early days. Big pump, all gone. Big pump, all gone. Big pump, all gone. Right? Another big pump. This one, I'd say about a little more than half of it gone. And then, which is the one we're still in, by the way. So this pump actually isn't over. So this pump is the one. So now we're in, you see this pump, that's the pump. There's the one. So this, it's like we're here, right? Right here, it's like where we are today, we could be like here. And look what happened. We came all the way back down to the prior floors of that pump. So the fractal nature of this says it could come all the way back down. I mean, to unthinkable lows. I don't know why, but that's what it's saying. The fractal nature, with so many people seem to chase this stock and get blown up. That's what the fractal nature says could happen if we do not um, correct. Okay. So anyway, so there we go. So there we go. So 1, 2, and then here's the 2. So there we go. Sorry. 1, 2, 3, 4, 5. So the whole thing could be over, the whole cycle, the whole enchilada. We'll know in 48 hours, I bet, which way we're going. Okay. If it and we'll see. So overnight they're trying to rally it. If it can rally, it will extend and the pump will continue. And maybe we can even get to 700. Who knows? So so it's very, very tricky right now. But I would be looking at this level, this key level right here. Once it breaks, just assume it's breaking out. Okay. If not, you're going to have a massive meltdown. All right, then the next is SanDisk. Now, SanDisk, we're expecting more downside, and I think we have a level on that one identified. So SanDisk was tricky because here we have 1, 2, 3, a connector and a cycle failure. And so this was a wave to short. Although the box was a little smaller than we wanted, they pumped it, but it's still, I think, will end up being okay. Now, depending on where it goes from here, it's going to, again, depend on the SMH and what I just said. So basically, right now we have 3 waves down, and we have a W, an X, and I believe a Y. Let me check out the 4-hour. Yeah. Okay. And the daily. So we have WXY. So now the question is here, 1, 2, 3 down, Actually, yeah, A, B, C, D, E. So this was a little triangle down. So now you have Y. So now you're in this bigger bounce. So the the uh, the thing is, this Y isn't finished, in my opinion, because we didn't come anywhere near our box. All right, we didn't come anywhere near our box. 1068. So looking at that bounce, if it fails from here, we're going to go down to 1068,860. Okay, and this area, and then this turns into, looks like, an ABC. So it could be that. So this A, B, C. Okay, so I think I'll go with this view for now. But if they're going to pump the SMH and pump semi-hardware again, then this is going to rally more. You're going to be in a bigger connector. And then it's just going to fail later. But and the target would change. This is the most direct path to the target. Okay, as long as you stay below 1700, I would expect to move down to like $1,000, 1068. No chart support until you get to 908. So probably that would be the right level. And then you'll see if it could rally from here. From that point on, it could have a big rally. It could have a major low. Or it could even fail and make 5 waves. It can do a lot of things, but this is the really big area to test, and then see where it goes from here. So that's what I'm seeing in the charts right now. Okay, so good luck on SanDisk. So I would still not recommend buying it yet. I would be waiting patiently to see if this level could get tagged, especially if it can just go straight down into our box in 5 waves. Okay. All right, so I think I covered everyone's question. I appreciate all the super chats, tons of super chats. I appreciate that, and I love talking to my community. Let me see if there's any other questions or comments people have made that I didn't get to. Just kind of looking through if there's anything else. Let's see what the market's doing as we finish up tonight. Still pretty green. Looking at oil coming out of the box. Like I said, if you're a member and you bought oil futures, raw oil, take your partial profit. You gotta move your stop up to 83. It could happen that fast, and it is starting to bounce. This is a short-term trade, so it may not make it to my next update. If you're actually based on that bounce, this cycle's done. So yeah, I would move your stop up to 83, and if it fails at 83, expect 77 as the next low, and then you would just extend C lower, and this would be a 1, 2, 3, 4, 5. But if not, that's probably your low right there at 83. All right, just kind of looking around, see where we're at. Yeah, not much. I guess we'll see how we open in the morning. All right. Just looking through, I'm reading everyone's comments. Question is, I've been a watcher for a while. And you never use fib extensions? I do use it on wave fours. I look for I use a fib retrace for wave fours. I like the 618. It seems the market, especially on the higher, larger degree monthly cycle, weekly cycle corrections, loves to go back to the 618 on wave fours. So I will use it once in a while, especially if I'm just like looking for more of a pinpoint entry. But extension, I do use the fib extension. That's essentially what I do. I only use it though. I only use the extension, the 236 extension, for targeting flats where they may turn, perhaps wave five profit areas, or if there's a double correction and it doesn't, like the equal leg extension, doesn't make sense because it would take it to zero. I'll use a 236 extension from the connector wave. So once in a while I'll use it, but it's not very often, but I do use it once in a while. Do you think SanDisk will have a leg up? The problem with 5 waves up is there's no guarantee for a new high. And this is a good thing to learn about in terms of from trading, in terms of what's I guess what's the psychological factor here? Probably I wouldn't say hope. Maybe it's hope. Like Cisco after the dot-com bubble or Intel, right? Yeah, Intel made a new high. You only had to wait 15 years. So we don't know. Maybe you have to wait 15 years. Maybe SanDisk will make a new high, right? I don't know. Or we just don't know. I mean, in I mean 15 highs from the final low for Intel, I think. Yeah. So but Intel peaked in 2000. So that'd be from peak to peak, it would be what 25 years, right? 25 years or something crazy. So anyway, so SanDisk, there's a see once the grand super cycle corrects, there's no guarantee you'll ever come back to the top, ever. It could even go to zero. Because you got to remember, when the grand super cycle corrects, it means whatever was going on here, the fundamental driver is not as bullish or is gone. So remember, this was as good as it gets, right? Everyone was buying memory. There was a shortage, people paying through the roof, but perhaps that demand is slowing down, and perhaps we'll never see that kind of crazy unbridled demand anymore ever again. And even though there'll still be strong demand, not and then more competitors come up with more different types of chips, and perhaps more supply enters the market, so it becomes tougher for these guys, and then they have to expand their capacity, and then you get over capacity, and so that pushes prices down. So then you need a new theme to take it out these highs that's not data center. It has to be something else. Maybe robots need memory, and then that does it, right? So we don't know, but what we can say is in three waves you get a reaction. So the good thing about our system is usually in three waves the market reacts, and then you can buy that reaction, and then if the market breaks the low, you can leave it and buy it again later, and then buy it again later. And then eventually at some point it becomes what we call go to zero, and then we'll never buy it. And then it's a chart I just delete forever. But this box here, it's definitely worth buying. If we go straight down into that box and erase divergence, why not? Why not buy it? Because what if it takes another cycle higher? Hell yeah, right? Why not? So you do it, you buy it, and then if you get a reaction, you can take some profit and then just put your stop, zero risk. And then if the market takes you out, then guess what? We'll just buy it again lower. And maybe a couple years from now, but we'll come back to it and buy it again later. But the problem is there's no guarantee it'll ever come back. That's the thing about grand super cycles, and that's the sad thing. A good example was Chesapeake Energy when the fracking boom in remember the fracking bubble. If you guys remember, Chesapeake Energy was like parabolic. It was like extraordinary, and then just like SanDisk, and then it pulls back, and then fracking boom ends, and then again there's all these other issues, and then before you know it, it's bankrupt and it goes to zero. Shareholders lose everything, and yet people were holding out a hope as they thought it would go back up. And so that's what I'm saying, guys. Sometimes they never go back up, and sometimes they don't go back up because their business fails. Sometimes it's fraud emerges. Remember Enron? It hit a grand super cycle low and it went to zero for fraud. Sometimes it's some other reasons. Like we don't know, and all we know is we buy in three waves, and and if you're not sure about SanDisk, buy the sector ETF, DRAM, right? And then you could try DRAM and see what happens. I assume it's in DRAM. So and if it's not, then you guys can check me. I'm assuming it's in DRAM, but you buy sector ETF if you don't want to have the single stock risk either. But anyway, this is what we're looking at. All right. So I think that's it for tonight, guys. Thanks again, and let's see what happens. We have a good week. A really news-filled week, jam-packed with news and event risk and catalysts all over.